Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Now, today is Monday, December 22nd, and my name is Raleigh White, and I'm coming to you from a kind of a chilly, overcast day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, we're lucky to have Kane Shea as a substitute for Roger, who's traveling today. And Kane's going to be covering a range of important topics, including a midday update on what he sees happening in the markets. He's going to talk about why swing trading has taken a recent back seat given the market conditions that we're in. He's also going to tell us what to focus on in the current market environment, what gamma exposure provides and does not provide in the current market environment, and also some adjustments that you might want to consider during holiday trading. Now, if you've got questions during Kane's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Kane's presentation. And remember, folks, that the chat is open to everyone, okay? Matter of fact, I've just made sure that it's open to everyone. And we do have some ground rules. Always be kind and supportive in your post. Number two, please keep to the topic. Number three, no political discussions allowed whatsoever. Number four, keep your side conversations between each other to a minimum so that the rest of us can focus on the education and information that Kane is going to be sharing with us, because after all, he's here to give us an edge in the market and to help us all become much more confident and consistent in our trading activities. Now, for those of you that were with us this morning for Roger's pre-market briefing, you'll note that there were some catalysts today that we needed to be aware of. First of all, Magnificent Seven, we noted that Tesla and NVIDIA were up 1% coming into the open. On chips, once again, Micron up 3% and KLAC was up 2%. On the crypto front, we noted that coin was up 2% as crypto pricing seemed to be rebounding a bit. Also, Japan, the Nikkei closed up 1.81%, giving us some headwinds coming into the open. And on the Fed front, folks, there are no reports or speakers or anything of note to consider today. Now, as it relates to catalysts, people often ask me, he says, Riley, why do you post these? Why are these even important? Well, from Roger's perspective, he feels that information that is either known or will be known during the trading session is important, but not yet priced in the market, is important for us to be aware of because, folks, these are volatility flashpoints. And so if we're considering trading some stocks, for example, or some options in any of these areas, we just might want to be aware of the fact of what's going on there to help us make better decisions. Now, on the small cap watch list front, we only saw two stocks today, HXHX above 69 cents and SIDU above $2. And guess what? They both hit and they both went to full profit. Let's take a look at the chart here. Let me get this up on my other screen and let me show you what I'm talking about. Now, on your screen, you're seeing six charts, and what we want to do is focus on the two charts all the way to the left. In the upper left-hand corner, we see HXHX, and coming into the open, we're looking at 69 cents as being the pre-market high. Well, right here on this first bar, okay, which is a 15-minute bar, we can see that we hit that point and we drove all the way through it. This level right here, it's hard for me to read that because the bars are up here, but this was a 15% gain, okay? So we hit our 15% profit target. We drifted back here a little bit and then punched higher ultimately with a high of $1.05. That's a 52% move in this and a solid win on HXHX as a small cap. Now, right below it in the lower left-hand corner, we have SIDU. Now, its pre-market high was right here at $2.07, and right here on the second bar of the day. So once again, these are 15-minute bars. We basically hit, and then we continue to drive higher. Our 15% profit target at $2.38, we achieved that here, and ultimately a high of $2.50, which is a 21% gain on this. So we had two stocks today, both of them were hit, and both of them were winners. Good for us. So, going back to the normal presentation here, once again, before I leave the small caps, I just want to remind everybody that Roger's selection process here is not only based on price action, but also on extreme volume. He is looking for pre-market volume that's normally about 100 times what the normal volume for that small cap is. He also likes to remind everyone that small caps are their own animal. The only thing driving that volume are retail investors like ourselves because it's not driven by institutions. And as a matter of fact, Roger was really a little concerned about small caps today because he knows that many retail traders are already taking holiday vacation. So there might be limited activity. But once again, we saw both of those hit and gave us full profit. Now, the other thing to remember about these small caps is you only trade them during market hours. So you wait for the market to open and you trade during market hours. And if you don't have a fill by 2 p.m. Eastern time, you should probably take the trade off. And oh, by the way, if you do get a fill, never, never, ever hold those trades overnight because it's not worth that nasty surprise you could wake up to. Now, as far as Rogers' large caps are concerned, boy, he gave us 27 that are currently on his watch list, 11 shorts and 16 longs. And once again, folks, when it comes to these, well, I'll talk about that in the closing comments, but Roger's a little reticent to take a look at swing trades at this point in time, given what the market's doing. Nonetheless, he brought up each one of these symbols, talked a little bit about them, and these are legitimately on his pre-market watch list. And if any of these trades, either short or long, meet his meet his standards for what a high quality trade would be, well, then more than likely he'll post that in the trading pit or in any other of his premium trading channels. So once again, 27 stocks on his short watch list. As far as his closing pre-market comments are concerned, folks, once again, he did notice that the futures markets were all very strong coming into the open. He also noted that there's good momentum and directional bias to the upside in the stocks, and that the pull to call ratio was favoring calls, and the VIX was near its scale bottom. All this is good news. But there is a fly in the ointment. He does remember, well, let me put it this way. The question always is the Santa Claus rally going to happen? And it's not materializing this year for a couple of reasons. And here are the flies. Fly number one in the ointment, bonds remain stubbornly low in the range. And this is a divergence that's kind of hard for him to explain because normally they are in lockstep, but they are separated. Okay. And he also pointed to the fact that there is lackluster retail data out there at this point in time. So even though the stock market looks like it wants to get some big gains and give us that Santa Claus rally, that lackluster retail sale and the stubborn bonds being low in the range, he believes that's what's holding that back. Bottom line, he said today, guys, be cautious, be nimble. It is a holiday week. It's a Monday. Be aware of false breakouts. And if anything, you might want to consider some tasty day trades if they exist for you and potentially stay away from exposure from swing trades. Now, we have a bunch of great people in the room here. We have a lot of people pulling in. And I just want to let you know that we have a fantastic agenda, and we're really fortunate to have Kane Shea with us, who's going to be substituting for Roger, who's traveling today. And Kane is going to be covering a range of important topics, including he's going to give us his midday update on what's happening in the markets. He's going to share with us why swing trading has taken a recent back seat. He's going to talk about what to focus on in the current market environment and why gamma exposure and what gamma exposure provides and does not provide in the current environment, and also adjustments we may want to consider when looking to trade during this holiday season. Now, you've got questions during Kane's presentation. Please type them in the chat window, and we will address them periodically throughout the session so as to not interfere with Kane's presentation. And also remember, folks, that the chat is open to everyone, and we do have some ground rules. Always be kind and supportive in your posting. Number two, please keep to the topic. Number three, no political discussions at all. Number four, try to keep those side conversations between individuals to a minimum so that the rest of us can focus on education and the information that Kane is going to be sharing. Because after all, folks, he's here to give us an edge in the market and to help us all become much more confident and consistent in our trading. And with that, folks, let's go ahead and say hi to Kane. Kane, how are you doing today? Thank you so
I'm doing great.
much.
Well, I'm sorry, I didn't hear your last comment. What was that?
No, no, thank you so much for joining us today, Kane. Roger, I guess he's traveling with the family down to Miami for the holidays. The VIP session is an important part of what we do, and we're so glad that you're here with us to share your thoughts here at midday.
Thanks, man. Yeah, I'm happy to be here. I'm always trading, whether it's a holiday or not, unless I happen to be traveling as well. So I'm happy to do this, and I'm excited to be here. We got a pretty good crowd. Looks like a couple hundred people. That's pretty good for a holiday week. So
Yeah, no
um,
kidding. Yep.
yeah, we'll see if we can get some good analysis going and what to watch out for. So before I get started with things that I prepared, I just want to see what have you guys been talking about recently, and maybe we can continue, and or maybe I can add some color to whatever you guys have been
Well,
discussing.
the thing that's been interesting, if I could go back several weeks, but let's just focus on last week, for example. The thing that Roger noticed was like that the SPY and the QQQ, they just basically seem to be stuck between the 50-day moving average and the 8-day moving average, just kind of pinched between those two ranges. And the
Yeah,
charts indicated that things were moving sideways. Now, earnings were coming out positively and things of that nature, and we're all wondering, hey, where's that Santa Claus rally? What's going to happen? But he did point to the fact that the bonds are just not playing. The bonds just remain stubbornly low. And the way Roger interprets the market, he looks at the bonds to be kind of like a front runner for what's going to happen. So he looked
yeah,
at the bonds being sort of like a drag as to what's going on. Now, from that standpoint, he's basically saying, guys, there are trades to be had, but just be careful about swing trades because the market is just moving in this 2 steps forward, 2 steps back, 2 steps forward. And he said, but there are opportunities to swing trade. His bottom line was if you know what you're doing, you can take advantage of what's going on in the market now, but you just have to be careful, trade with a smaller size, and be nimble. And that carried over into today. And I think what was interesting today, Kane, was that the futures markets, they were up brilliantly. I mean, the VIX was down low in its range. The put to call ratio is favoring calls, but he says, but look at these damn bonds. They're
yeah.
just there. And then he also pointed to retail data, like Nike's data came out and it was horrible. And he says retail data normally drives those Santa Claus rallies. So if we look at underperforming retail data combined with the bonds, he says he thinks that's just, it's just like lead weights on that balloon, just preventing it. And so that's essentially what he has shared with us coming into today.
Gotcha. Yeah, so it's really easy to get head faked during the holidays. So let me start sharing my screen real fast. And so, Raleigh, you mentioned that, hey, it looked like we were bouncing between like a MA50 and an EMA8. And right now, they're not that far apart, although it looks like today they're going to start increasing. So I'm not too surprised by chop towards the end of this year. And the reason is because it's been such a stellar year. It, the the market has gone basically straight up, except for that April hiccup, right? Right. Well, we started out weak, and then we had this April hiccup, and then if we look at the lows from where we bottomed right here, all the
Right
way to
there.
where
Yeah.
we are today, that is 42% on the S&P 500 in call it 8 months.
In 8 months.
That's
Yep.
that's pretty amazing. And even if we consider where we started the year on January 1st or 2nd or 3rd, wherever the day was, so somewhere right around here, okay, we are up 16.5%.
Okay. So if we take away the Independence Day
Right.
tariff dump,
Exactly.
we're still up
Exactly.
16%. Wow.
Yeah. And that is a banner year no matter what. No matter what year you're talking about. It's not that many years you get 16% out of the stock market, and certainly not a 40 something percent recovery off of a low during a calendar year. So this market has already gone up a huge amount. So if I'm a portfolio manager or fund manager or whatever type of manager you want to call it, if I'm institutional and I'm holding a book and I manage to, it doesn't matter if I'm up 16% because I sat through this. Maybe I'm a long only portfolio, or I could time it well and I recognize this as a possible V-shaped recovery and I started entering. Actually, a lot of institutional buy programs entered right here. You can tell by the AVWAPs, the anchored VWAPs. So a lot of institutions did catch this bottom. And if I'm having a 42% year on stocks, if I'm just a stock portfolio manager, if I'm doing options and I've been able to leverage that, 3 to 10x, I'm having probably one of the best years of my career.
I would think so.
And I'm probably sitting on a pretty juicy bonus going into the end of the year. And I don't want to mess that up. Right? There's no reason for me to say, let's load up on risk right now and see if this is going to go even higher. I'm already up an amazing amount. This is probably a career-making year for many, many, many portfolio managers. They may never have another year this good in their entire careers, even if they have 10, 20 years ahead of them left in their career. So there is no reason to start loading up risk and trying to drive this market even higher, because it's already, all I'm doing then is risking all the gains that I've gotten this year so far. So personally, I'm not expecting a huge rally. We might come and test all-time highs. If we test and successfully break all-time highs, I don't think we're going hugely higher by the end of the year. That might be next year's stuff. Right? So if we come up and we test these all-time highs, and then we're already on January 2nd or 3rd, I'm not sure which the first trading day is in 2026. It's probably the 2nd or probably the 3rd. So that might be the time when we can expect this to start moving up and breaking those all-time high records. So chop, we've seen a lot of chop, especially if we allow for a huge amount of volatility, which we have had, then we're looking more like, can I find my box tool? Okay. So we're looking more like this. Actually, we could say that we could even extend all the way to here. Okay. So we could say that this market has not really done anything but trade in this box since the beginning of September, or if you don't like that, fine, since the October 10th drop for sure. Then this is defined the range that we've traded in. So are we going to break out of this box by the end of the year? My personal opinion is there's not enough incentive on Wall Street to make it happen. Mm-hmm. Now, we are during the holiday season where volume does drop off quite a bit. So we could see a lot of volatile swings, and we have to remember who's playing in the markets right now. Obviously, we are because we're obsessed with the markets, but a huge amount of people are not. A huge number of retail traders are not trading during this time. A huge number of institutions, or at least their full desk, is trading at this time. And they're not going in with huge amounts of capital. And if anyone is trading right now, it's most likely the junior guy on the desk. And that junior guy has very limited amount of risk he's allowed to take, and a very limited control over or discretion over the trades that he's allowed to take, or she.
Okay, yeah.
Yep. So what that means is this flow can, number one, since volume is less, it'll be easier to push the prices around and manipulate them. And number two, who is trading? Who is trading right now? You got to remember, okay? So we already said a lot of retail is not, a lot of institutions are not, or at least not nearly the same size and not the same player who's in control of the desk. So who is trading? Well, who never sleeps? Algorithms. Algorithms are trading.
Those
Okay.
bots.
Yep. And who else is trading? Well, the market maker. The market maker has to keep on trading. So, uh, so those two are going to be controlling the markets even more so than they normally do. If you have algorithms running amok in a thinner liquidity environment, then what we see is prices get pushed all over the place.
Okay.
And so, and then not necessarily sustain. So, so it could be up today, and then we have this gap up, and then not really go too far since the gap up today, but that could very easily reverse tomorrow. This doesn't have to continue. We don't have to go, oh, look, it bounced off the MA50. Oh, look, it poked above the EMA 8 and EMA 20. This is beautiful. This is what Roger, I think, would call an A line. Okay. A line breakout above the EMA 8. And then a gap up and run. That looks like beautiful textbook technical, okay, but it can be taken away very easily. We have to be very careful of technical analysis right now because we don't, technical analysis only works in highly liquid environments. And it works best in less volatile environments. Okay, so that's key. That's key here. If you don't have a huge amount of volume, then you can't rely on your technicals. They're not going to be as accurate as they were before. So for example, do we, I don't know, what's a random small cap? What's one of the small caps Roger gave this morning?
HXHX.
Okay. All right. So if I look at this and I say, is this thing trading technically? It doesn't have a lot of data on it, so it's pretty recent IPO, looks like. But I cannot say that, for example, these are my moving averages. Does it really follow the moving averages? You can sort of say yes, but look at how big these wicks are and look how far it busts through these moving averages before. It doesn't even really cleanly follow a trend very well, right? So that's actually the trend, but it broke through it quite significantly and fell. And then you can't call this an uptrend. You can't call it a sideways. It was actually maybe more accurate for me to have drawn it like that, right? So these things, they just don't follow your normal technical analysis. Your technical analysis is dependent on liquid markets, dependent on liquid data points. It's relatively smooth data points, which you
Yeah,
don't get.
and to that point on these small caps, Roger emphasizes that an awful lot. He says, look, retail traders are moving this volume in the small
Mm,
caps. It's not institutions. So you're not going to see the volume, the liquidity for any indicator to make any sense. So his
right.
strategy basically is, hey, I love the pre-market high. It's about 100 times what the normal volume is. Let's see if we hit that high and move through it. And that one did work out for us today. HX did have a 52% move from the open, and it was a small cap winner for us. But it's a different strategy. But I
Yeah.
see your
Yeah.
point here. You're just
Yeah.
reinforcing the point that if you don't have volume and liquidity, you're just the technical indicators aren't going to do much value, have any value.
Yeah. Yeah. And the interesting flip side of that is, you have to recognize, am I using institutional tools or am I using retail tools? And if you
Yeah.
try to apply institutional tools to a market where retailers are dominant, it's probably not going to work too well. And if you try to take retail tools and try to apply it to a market where institutions are dominant, it's not going to work very well. And that is why when you look at things like, oops, what did I just typed into the chat. Oops. All right. So if I look at the SPY, it's definitely dominated by institutions, and so we have certain levels like the MA200, the MA50, the EMA8 that institutionals are actually looking at. We don't use things like MACD. We don't use things like stochastics because institutions, they don't They don't care about that stuff. They are not buying and selling the same way that a retail trader is. They have institutional buy programs. They buy millions and millions of shares, and they need to have a program in order to leg into it and leg out of that. So your retail tools are not going to work very well on something like the SPY or any of the S&P 500 stocks or the Mag 7s. But if you go and you say, hey, I want to use some of this, so for one thing that I know for sure that Roger and I completely agree on is the usefulness of Fibonacci's. I know a lot of other guys use them even on SPY and S&P 500 stocks, but I personally will never use something like, well, I don't use Fibonacci period, but I will never use it on an S&P 500 stock simply because institutions don't use Fibonacci's. They don't. It's not part of the curriculum, and it's not part of the practice because Fibonacci's to them are useless. When you're trying to buy millions and millions of shares or sell millions and millions of shares, Fibonacci's are not going to help you at all. It does help you with retail because a lot of retail people believe in Fibonacci's. So if I go and I try to run a Fibonacci on the S&P 500 or S&P 500 stock, it's not going to work out that well. You'll have some hits, you'll have a lot of misses. But if I do something, I don't know about HXHX because it hasn't really had much of a pattern. But if I use it on something where I know for sure that retail traders are dominant, then I get to see, well, are the retail traders playing in this name? Do they like to use Fibonacci? If they do, then you'll see that those Fibonacci levels respected quite a bit. But if they don't, then it's going to be same thing as the S&P 500 stuff. You're just not going to see it work out all that well. So you got to understand what market are you playing in and what tools are you using, and are they the right tools for the market that you're playing in?
That's a good point. And Kane, Roger had mentioned this in the past, and it made sense to me because all of my real trading has been in the futures markets and commodities, et cetera. And I find that, for example, some of those things like the MACD, RSI, things of that nature, if applied, they can work quite nicely in that market. He said the mistake is trying to apply things that work in the futures commodities markets to what's happening with stocks and options. And he says that was just something that, at least in his opinion, it does not translate at all.
Right. Yeah, I completely agree with that. And so if you can study and notice like, well, for whatever reason, I really like MACD or RSI, I'm going to study this particular portion of the market or this particular stock symbol, then yeah, you could actually find ones where it works really well for you. So Ken is asking, is it fair to say that technical indicators are reading the big dogs? Depends on the technical indicator. there's hundreds and hundreds of technical indicators, and not all of them are going to be able to tell you what the big dogs are doing. So I would stick to the ones that are used institutionally, and there are not that many of them. Basically, moving averages are what are used, and supply and demand levels.
So you have some additional questions here quickly before you move on. People are interested. Kane, how do you tell whether the volume is retail or institution driven?
If so, on a normal day, if you have significant volume, well, number one, retail is never going to be a significant portion of the volume on a large cap stock. It's just not. I mean, retail doesn't have that much sway. What could happen is if suddenly retail loads up on a very concentrated set of strikes on the options. So we have a Wall Street bets, GameStop type of situation where everyone piles into a very small or very close set of strikes. Then what that could force is the market maker to go and hedge themselves, and then the market maker becomes a huge volume in the underlying. So again, indirectly, you could say that the volume was affected by the retail guys, but it's really the dealer, the market maker who is hedging themselves.
Sure.
So a huge significant volume spike is never on a large cap stock is never going to be the retails.
And it can't be. And
Right.
and folks, for people that are asking the question, if you're familiar with Roger's Pro Trader dashboard, for example, he is scanning and identifying stocks that are outperforming the SPY. And quite honestly, those stocks are being driven by institutions and algorithms.
Yeah.
It's pretty clear cut, and that's where your focus should be.
Right. So, and if you're a large institution, this goes to Ray's question. He's asking, what are some indicators that would tell if institutions are in a stock? Well, in the large cap stocks, institutions are in, period. They may not represent a huge amount of their holdings, or they may be long or short them or whatever, but they're playing them. And I'll show you why. Let's just say, what's your favorite sector right now? Let's let's uh, let's say, I don't know, healthcare, right? So healthcare is looking pretty good. And just say, institutionally, I want to be long healthcare. And I go in and I look at all the healthcare S&P 500 healthcare stocks. So let's go over here and I say market is SP 500 and is it sector or industry? Sector. Sector is, what do they call it on Stock Fetcher? It might just be healthcare.
I just think, yeah.
Let me do.
Let me see. Cyrus is saying XLV.
Yeah, apply to watch list XLV. And I need the S&P 500. Oh, wait, I don't need that. I just need, okay, it could be called medical. Looks like it's mostly called medical. Okay, so I'll go over here and I'll say sector is medical. Sector medical. Forgetting my stock fetcher notation. Let's see.
And another one that Roger really likes as a high flyer is financials.
Okay, financials. Okay. Where's? I know I usually keep it in comments somewhere in case exactly this I forget. Industry semi. Okay, no quotes. There we go. So there's 62 of them in the S&P 500.
Okay. And this is
So,
healthcare, right? Or medical. Yep.
right. So let's just say I like VTRS. That's a very nice trend right there. I like Merck. Okay. Maybe I'm not so clean on this. I like BMY. That's looking really good. And let's just say I'm a huge institution. I'm a multi-billion-dollar institution, and I've got $100 million to put into BMY or into healthcare. Do you think it's going to all go into BMY? I don't, right? So what is the market cap? If I go to bar chart, even on an S&P 500 chart, stock, BMY, okay, the market cap is 110 billion. Okay. So that means if I'm in there with my 100 million, I'm already 1% of that stock. Okay. And that may not sound like a lot to some people, but for an institution, that is way too much. Because how many billion-dollar institutions are there? There's quite a few of them. Right? So if I'm one of 100 and all 100 of them want to be in healthcare, they can't all take up 1% of BMY. It's not going to, they can't do that. It's way too much. And so I have to take my 100 million and I have to go, okay, well, I'll sprinkle some into BMY. That looks pretty good. I'll sprinkle some into MRK. I'll sprinkle some into VTRS. That looks pretty good. I really like Johnson and Johnson. I'll throw some in there. Maybe I'll throw some in CVS. Okay, and other ones, Eli Lilly. That looks pretty good. And then what is going to end up happening is that I'm going to have a basket of healthcare stocks, almost like I have my own personal mini ETF for healthcare, except I'm more selective than this XLV is because I'm institutionally, I wouldn't just go and buy XLV. It doesn't make sense, but I am making my own mini basket of healthcare stocks. So because of this, and because we're kind of spreading out our money and we do have some risk diversification, then I'm going to end up holding shares in many of these. Now, if we go across many institutions, we're all going to select different stocks for different reasons. Maybe every single one of us agrees on Johnson and Johnson, and that's why it keeps on going up. But some people have different strategies. So they might like buying what appear to be underperforming or undersold or oversold stocks, or because maybe ZTS represents a huge value and someone like Warren Buffett goes in and buys right there. Whereas someone like myself, I wouldn't do that. Right? I'd be jumping on J&J, like the ones that I just showed you. But ZTS might look very good for a different type of strategy, a different type of portfolio manager's personality. So because of this phenomenon where we all want to be in healthcare right now, but we have different strategies and different ways of analyzing the market and different holding periods and different rules inside of our portfolios, what ends up happening is across many institutions, we end up buying all of the S&P 500, right? It's just what ends up happening. So every single one, and then of course there are institutions who have portfolios that are specifically, for example, the SPY does contain every single one of the S&P 500. The triple TQQQ is going to have all of the QQQ stocks, right? Any of your leverage funds are going to have every single one of them, but any of them that are designed to sort of mimic or follow, because there's a lot more than SPY that follows the S&P 500. I don't know them all because I don't trade them, but they have a lot less volume than the SPY. But if you do S&P 500, you're going to find a lot of other, I don't know if they'd say S&P. So you're going to find a lot of them that track. Invesco is going to have one. State Street is going to have one. Vanguard's going to have one. They're all going to have their own version of this, of the S&P 500. And so they're going to, institutionally, you're going to touch all of them. And then depending on the rules of your particular institution, you may branch out to mid-cap stocks. And so a lot of those mid-cap stocks may or may not have some institutional flow in them as well. And then very unlikely, at least not if you're of significant size, are you going to see institutions in small cap stocks.
Interesting, Kane, and what a fantastic dissertation that you just gave us, especially from your unique position and the experience that you have. And it's interesting, Ralph brought up something that, Roger kind of hammers on us as retail traders, is that we need to be aware of, trading similar stocks, because we don't want our portfolios to potentially be out of balance in case things move against us. And
Right.
I think they were going, but you said, look, I've got 100 million to spend. I just can't put it here. I like this. I'm going to sprinkle it around. Is it fair that the institutions, they look at that differently?
Yeah, absolutely. Absolutely. Yeah, you cannot view your pile of money the same way as you view an institutional pile of money.
Why
Right?
not?
Yeah. You wouldn't
I'm
want to
missing
either,
some
right?
zeros. Yes, yeah.
Yeah. So, what I think it was Carnegie who said, you've got to put all your eggs in one basket and watch it closely, right? And then Warren Buffett said that diversification is a tool for the uneducated, right? So it's or something like that, or a substitute for education, something like that. So basically, both of those guys are saying like, look, if you want performance, you got to be concentrated, right? If I look at the performance of the mags, okay, okay, we just got done saying that SPY was up 42%. Okay, well, look at mags. Mags is up 80% since that low. Okay, double. So I can sprinkle my money around 500 stocks and make 40%, or I can sprinkle my money around 7 stocks and make 80%, make double. Okay, so if you know what you're doing and you can analyze it correctly, then diversification is one of the worst things that you could do, because it will by definition, diversification is a hedging strategy, and all hedging strategies will decrease your performance, although it does help you on the risk side. So when things go wrong, you're going to be happy you did it, but when things are going right, you're going to suffer for it. So what, as a retail trader, you are forced, because your pile of money is so small, you are forced to not diversify. If you diversify, you're just like, oh, okay, I'm just going to do S&P 500. Okay, that be the ETFs make it diversification more accessible to our small piles of money. But if you are going in for individual stocks, then absolutely, you do not want too much correlation, because the idea is you are trading the same thing anyways. So if we go back to this XLV and I'm trading VTRS versus Johnson & Johnson, okay, I'm trading the same thing. I'm trading pretty much the same chart. Okay, so it doesn't make sense to take my money and split it between J&J and VTRS, because that if one goes up, the other's going up, one's going down, maybe not on a day-to-day basis or tick-to-tick basis, but overall that is what's happening. And what we're saying then is, if you're going to, you could, if you wanted to, allocate to both, but you would take the same dollar amount that you would if you were only going to trade one of them and split it into the two. Well, if I'm going to do that, then now I have double the work to tracking both these stocks and both their performances and the options that I have on them. I might as well simplify my life and just put it into a single name and a single position, rather, because I'm not getting any benefit from doing both of them, or 3 or 4 of them, even less benefit. So there's no point in for me doing that. I just make my life more complicated and more likely that I'm going to make mistakes.
Sure. Fantastic, Kane. Once again, thank you so much for taking the time to address these questions as we talk about what's going on in the market. By the way, there was a little parenthetical here. I know hypothetically you were looking at the healthcare, but generally speaking, people were wondering, do you like this sector at this point in time? Is that a sector you're interested in?
It is on a more defensive side, yes.
Okay.
Yes. So I would have a small amount of my portfolio. I wouldn't mind having one position in healthcare at the moment. Now, again, this is the diversification issue that we have. Right now, what is leading? Right now, what is really hot? Well, it's starting to rotate back into tech. So if I look right here, is this the right one? Yeah. So what is leading today? We've got solar, lithium, aerospace, biotech. These have been, well, lithium in particular and solar in particular have been at it for a long time. You can see it right here on the 1 week. You can probably see it right here on the 1 month. And then we've got it over here on the 3 month, and then we've got it over here on the 6 month. These have been sectors that have been really hot and people have been paying attention to them for a really long time. And even as we've kind of pulled back a little bit from the quantum computing and the AI stuff, that is fading in and out, and we're starting to fade back in at the moment. The energy that it takes and the inputs that it requires has been hot and continues to be hot. Wow. So that is probably where I would be putting the bulk of my money. But again, so do I want to put all my eggs in one basket, or do I want to diversify a little bit? That depends on your market environment. If we were in this screaming bull phase right here, I would just solar, technology, lithium, nuclear energy. That was the time to load up on that. It was this right here. But if we're chopping sideways, then we have a lack of direction. And therefore, that is when I will diversify a little bit, because I don't know. I don't know if this is going to break out, this is going to chop back down, maybe it's going to break down. I don't know right now. What a choppy sideways period is the market trying to figure it out. Right here, the market had it figured out. We're going down, and the ship is sinking. We're going down. This is the worst start we had in decades, right? In the S&P 500, and then it turned around. Then we said, "Oh my gosh, load up on everything. We love AI. We love everything that's going on, and all the mags are dragging everything up. Let's load the boat." And that was this period right here. Right. You don't want diversification in these instances because there's certainty in the market. They said, we love these sectors, we love these stocks. Right. Great. There's zero uncertainty there. Here we got uncertainty. So that's why I would be okay with doing XLV right now.
Interesting. And because so many people had commented when you were talking about, I'll see what Michael said. He said, trade the hot index sector and stock, the best advice you could give somebody. And you just reiterated that. So, healthcare looks interesting, but let's take a look at what the sector rotations are. What is the current sector analysis? That tells you the sector that's hot and the stocks that are in there. Is that a fair summary?
Yeah, but also keeping in mind the market environment that we're in. So that is absolutely true when we're trending like this, or even like this. Okay, then you're shorting the sector that's wild, that people don't like. But when you're chopping, you want to be okay. So assuming that you can't trade neutrally, right? This environment is great for income trades. It is great for those verticals. It's great for the iron condors. It's great for butterflies. It's great for the things that if everything just chops sideways, I'm still going to make money. So collecting premium. Yeah. But if you can't do that, if we're talking about stocks only, or if we're talking about, hey, I've got to buy a call or buy a put, I can't really do anything else. Okay, this is going to devastate your portfolio unless you're day trading. Unless you're day trading, then you can get directional moves. But otherwise, this is going to devastate your portfolio. And therefore, what you want to do is try to find some sectors that actually are trending and they are not chopping like this. And so you would want to be long the strong sectors and short the weak sectors. So again, this is where diversification or playing both sides really is. This is where it's valuable. It's not as valuable right here. The reason why you're doing it right here is for black swan events. That's the only reason why you might do it during a trend like this. Yeah. Is COVID might hit, and you rather to the so we don't know. So that's the only reason you do it here. Over here, when we're chopping back and forth, you want to be on both sides unless you can trade those non-directional strategies.
So coming back to your agenda, we wind to this point. So what should we be focusing on? What works best in this current holiday environment that we're in, Kane?
Yeah. So what you want to be careful of for sure is anything that is trend following or relies on a momentum breakout. Okay. So those breakout strategies, those trend following strategies, those are the ones that you want to be very, very, very careful about, because you're not going to get multi-day continuation. Right? We might get a few days in a row, but probably not beyond that. And also with breakouts, you need that volume and you need that institutional push and you need that institutional backing. And you're far less likely to get that in a holiday environment. So you want to be very, very, very careful of those. The ones that will work better, which I don't think I've seen Roger to really give out a strategy that takes advantage of this. And I certainly haven't put one out, but the mean reversion strategies are the ones that are really good in this type of environment because you're not expecting them to keep on pushing and
Right.
go somewhere. So if you have a mean reverting strategy, for example, you have some way of detecting overbought, and this is generally some. So I'm going to say some stuff that is going to go against what you've been taught. But the reason why it goes against what you've been taught because the market environment that we're in right now is not the majority of the time. Okay, so the majority of the time, what I'm about to tell you is a no-no. Okay, but in the right environment, it is fine. It is good. I don't know if you guys remember, what was the name? Zanzaneri. He used to have
Oh, Jeff,
a,
yeah.
yeah, he had a, I think it was called Burn Notice, where he was actually, it was a contrarian thing. Overnight, he saw that if it went up, then he would bet against it. And then if it was down, then he would go for with it. He would go bet on it going up. Okay, so that is a mean reversion type of strategy. So a mean reversion type of strategy would be, hey, look at this. We hit the all-time high or very close to it right here. Let's short SPY. And Roger and I, under normal circumstances, we would tell you, do not do that. Do not do that. Do not bet against the trend. Do not bet against the market movement. Do not bet against the price action. However, in this market environment where we are in right now, where there's not an institutional backing and it's mostly dominated by algorithms, okay, what does an algorithm do? An algorithm hunts stops and breakouts. So if algorithms are in control right now and you try to play a breakout right now and there's no institutional backing, what is the algorithm going to do? It's going to short you into oblivion. Okay. And so a lot of people might be trying to be placing breakout orders right here, and the algorithm is going to hunt those, and then it's going to start bringing it back down. So in the holiday season or thin liquidity environments, then yeah, the mean reversion type of trade where you're going actually betting against the trend, but it's not just betting against the trend to bet against the trend. It's you are still operating on a market phenomena of mean reversion and saying, hey, we're probably going to return to that MA50, or we're probably going to return that to that EMA8. I think Roger has a rule where if it's got too far above the EMA8, he doesn't go long, right? He waits for the pullback. So
That's right. If
what
he
we're
sees
saying is,
overextension, yeah, he just
yeah.
exactly.
So instead of waiting for the pullback and going in and then going long again, because of the unique environment that we're in right now, you actually fade it back into the mean reversion.
Right. It's
Yeah.
interesting this morning when he was looking at the VIX, Kane, he
Hmm.
noted that the VIX was almost at the bottom of its
Oh yeah.
zone. And he
Yeah.
said, this is one where
It's
you might look for a mean reversion because technically, seriously, he
yeah.
expects it to basically bounce back. So, in other words, he was going, if there's any sudden kind of a move down in the market, expect that VIX is just going to spike. It was just
Yeah.
a quick
Okay.
comment that he made.
Okay. Well, we're on the same page then. I guess yeah.
No, no, you
This is
are.
the type of
Yeah,
environment. Yeah. So
absolutely.
so right now it's best not to focus on directional swing trades. If you have a favorite neutral strategy, then you would go for that neutral strategy. And then the other thing that you could do is you could hop into zero DT. You could start trading, day trading. So because you do see those moves, like today we saw. Let's take a look at what happened so far. Yeah, so you see, you can catch these. So right here at 683, you saw that bounce multiple times before it sort of picked a direction and then started chopping sideways again. So if you had recognized that, if you had some way to recognize 683 was an important level, then you could play that bounce and play the bounce and play the bounce. And then I happen to have a way to recognize that, but
I was
we'll get
wondering
into that
about
a little
that.
bit. Yeah. So if you look at my Telegram channel, what I sent out this morning, Okay. So what we said over here is like, look, hey, we're getting mixed messages across SPY, SPX, and XSP, which is not too surprising. But it did look like we opened too high and that we were going to come down. And I said, maybe somewhere between 680 and 683. Okay. So what happened? It came down to a little below 683, right? Well, bounce off of 683 three times. And then a later update, I said, hey, things are shifting. Looks like 683 to 685 might be what we're going for later into the day, maybe into the close, don't know yet, but at least that's the range that we can see at the moment. That was at 7:56 my time, which is 10:56. Right now it's 12:49. Okay, so 2 hours ago. So 7:56 over here. Okay, I said 683 to 685, and just a few minutes later, it traded all the way up to, what is that? 684.97. so within 3 pennies. Okay, and then we have chopped in this area since then. So there are ways of knowing ahead of time what important levels are, what's going to be sticky, how that's going to gravitate. And especially right now, remember what I was talking about in terms of who's in control, especially during the holiday market. Algorithms and market makers. And everything that I just showed you was based on market makers. Okay, predicting what market makers will have to do in order to hedge themselves, and their hedging activity, where is that going to push the market? Well, if big institutions aren't playing, and well, retailer is less important, but if retail is not participating as much, by far, and even on most days, the market maker is still the dominant force in the market. But especially during the holidays, the market maker is going to be even more dominant or more likely to be in control of the market. And so these levels become very, very useful to have at hand. What are the bands on the chart? These bands on the chart are, they represent where I've placed some trades. So we're within my profit zone at the moment.
Yeah, fantastic. So once again, and I know we're going to be covering this because we're going to be doing, actually, Kane, we're going to be wrapping up here shortly, and we're going to do a replay of the presentation that you and Roger gave on Saturday, where you talk a little bit about the challenge that you have
Oh yeah, yeah.
and what you can do if you know where these levels are.
Yeah, I mean, if you can imagine that you could identify within $1 and sometimes within a penny, just like over here, we got within 3 cents. If you knew that hours ahead of time, or maybe right when the market opened, you could imagine that's some pretty powerful information, and that you could make some pretty profitable trades if you had that information. So I'm very excited about that. Thanks for bringing that up, Raleigh. We're calling it my 5X challenge. So basically, when the guys at the pub saw my levels and saw how accurate they were and how often we were hitting, they got really excited and they challenged me. I said, sure, I'll double an account. They said, Kane, 2x is not a challenge. Well, looking at your results, 2x is not a challenge. I was like, okay, fine. And they said, why don't you 5x an account? I was like, okay, well, that's I am of the school. I grew up and I was trained in Wall Street to under promise and over deliver. So when I was saying 2x, I was, hey, yeah, that's all under promise and over deliver. Now they're telling me 5x. Okay, and so I had to take a pause, reevaluate, check out everything out, and say, well, do I have confidence that I could under promise and over deliver if it was a 5x challenge? And well, the fact that we're bringing it out and actually doing the challenge should tell you something about that evaluation. So I wouldn't be doing the challenge if I didn't honestly believe that we could under promise and over deliver.
Yes, and I know that in the session that we've got coming up here shortly, where you go into that in some detail, you share a lot of the you share a lot of the results, the analysis that was done that basically help you feel like this is something you could comfortably do. And what I think is really cool about it is that this is something that I understand you'll be starting the 1st of January, right? This beginning of the next trading year.
That's right. Yeah.
And you're going to be sharing with everybody your statement, your account statement. You're going to be showing the trades that are being taken, et cetera. All of these will be issued, people be able to follow along with exactly what you're doing as you're growing your account, taking advantage of what you just showed here on the screen, knowledge of basically where you expect the SPY to be during the course of the day.
Yeah, yeah, exactly. We've loaded up on technology. We've got so I'm trading live, and live everyone will get notifications of exactly those trades via Telegram, and then they'll have a portal to look in and see exactly what's being held in the portfolio, what has been traded in or out of, and track the P&L so far.
Man, that's unbelievable. And I know that at the heart of all this is gamma exposure, something that you've really helped educate so many people about. Because once again, I know I'll speak for myself, that's something I never even knew about. The
Mm.
concept of gamma exposure and why it's important to understand it and to know how to take advantage of that. And so you had a note here in your what you wanted to cover today, and that was, when is gamma exposure good to use and when is it not good to use?
Yeah. So, well, it shouldn't surprise you that what my answer is, and the reason why I concentrate on it so much, and the reason why it is at the center of almost everything that I do, is there's never not a good time to look at gamma. So, and what I tell people, especially, is when you're looking for an edge in the markets, the vast majority of edges they get taken away, meaning that either the market environment changes and so your edge no longer applies, or you got hunted. So these algorithms caught onto the pattern of what you were doing, and then they took your edge away. Or it became common knowledge and a lot of people are trading it, and so then your edge is taken away. So for example, the turtles, once they went public and people knew what they were doing, their edge got taken away and they had to adjust and adjust and adjust the exact numbers that they were using. And now if you're using a turtle strategy, it's very difficult for you to have a strong edge in a turtle strategy now, because everyone knows about it and there's so many algorithms that hunt for it. So what's beautiful about gamma exposure, though, is that edge cannot be taken away as long as a market maker exists. And I'm pretty sure if the market maker doesn't exist, then you don't have a market. So what we're saying is that that edge is not going to be taken away. And it's because it is so fundamental to the business model and what the market maker does that they can't stop doing it. And it can't be hunted away by an algorithm, because the market maker is going to move in that direction no matter what. So when a market maker has to hedge, they don't care about liquidity, they don't care about price, they don't care about momentum, they don't care about volume or how much volume has traded in the day or how much it trades normally in a day. All they care about is, I'm exposed and I need to cover that exposure. I need to limit my potential for loss right here. And so they go in, and they go in size, in direction, if they are forced into a position to do that. So that edge doesn't get taken away, and it operates in the market every single day. The question then is it the dominant force in the market today? Like specifically in the session that we're trading it. And the answer isn't always yes, because you have institutional flows, right? You have people, other big whales that are moving and taking direction. However, you also know the statistic that over 70% of the days, or around 75% of the days, are non-directional. They're non-directional. Institutions are not actively accumulating or distributing on average on a given day. Most of the time, they're sitting and holding. Right? They're waiting for prices to get somewhere. So most of the time, the dealer, the market maker, is in fact the one that has the control. And it's just on those days where there happen, for example, earnings, right? A market maker can easily get washed out on earnings because huge amounts of flow all come in at the same time. Or if there is a institutional buy program that gets initiated or gets supported on a particular day, then the market maker can get washed out. So it's not perfect. Obviously, nothing in the market is. But what we're saying is, who is the dominant force in the market most of the time? And since 2020, since COVID, it has been the options market maker.
Wow. Wow. And I tell you what, some people, once again, some people are basically saying here, this is just fascinating, trying to wrap their heads around that, because I remember the first time that you presented this concept, I'm sitting here going like, why is anybody forced to do anything? And you're sitting there, you're going like, well, when you have the kind of exposure that you do, you have to hedge. And there's only
Right.
one way to hedge those positions, and that's to buy the underlying stock.
That's
And
right.
once I sort of grabbed onto that, and I'm going like, then it becomes somewhat of a self-fulfilling prophecy, because
Yeah.
prices are going to edge up towards that point, and they'll accelerate. As a matter of fact, it
Yeah.
just makes perfect sense.
And you have to remember that the market maker has an involuntary book. They did not choose any of the positions that are in their book, right? They are
Right.
just like, they were placed upon them, and then you got to do something with it. And how easy is it for you to lose money if someone just handed you, hey, here's all the positions. You don't get to choose. Here's a position, here's a position, here's a position, here's a position. If anyone did that to me, I'm like, okay, well, how did you come up with these things? And why are these even in my portfolio? And then the only thing I can do at that point is hedge the heck out of everything, so I'm not going to lose a bunch of money. And that's exactly what market makers do, because they didn't get to pick anything. They can't go by direction. They can't go by momentum. They can't go by volume. All of those things that I said earlier, they can't go by any of that. And so all they do is they hedge wherever they have risk.
Wherever they have risk. Well, Kane, once again, thank you so much for coming today and sitting in with Roger and sharing all your knowledge and your background. I think we all enjoyed it. It's always fun to have you and Roger together. I always feel blessed when that happens because of everything that I learned. And as I had mentioned to folks, what we want to do now is we're going to go ahead and shift over to a presentation that Kane and Roger gave this last Saturday. It's an introduction on the challenge that Kane was talking about and a special programming that he had put together. So, Kane, once again, thank you so much for being here, folks. I am going to be here in the background. Kane may be here a little while as well. We'll answer any questions that you have. But with that, Kane, I'm going to grab the screen here and
All right.
go ahead and begin this replay. And
Awesome. Thanks, Raleigh.
you're welcome, buddy. Take care. And by the way, if I don't happen to talk to you, and I hope I do, but if I don't for whatever reason, have a very Merry Christmas for you and your family.
Uh, Thank you. You too. Thanks so much.
Tools and strategies to the best of our abilities, and they're pretty good abilities. But no one is going to guarantee anything in the future. It's impossible. We don't know what the future holds. We don't know what the president will say tomorrow. Heck, we don't even know who the next Fed is going to be. It's hard to predict the future. All performance results are from Kane's pilot testing the new strategy for the 5-time challenge. From 8/23 of 2024, for a good 4 months, he's been testing it, making sure it works in real time the way it worked when he was creating it. So far, and I mean, folks, check this out. These numbers are nothing to laugh at. 48-6 with an 88.9% overall win rate and an average return, winners and losers included, of 79.2%, with an average winner of 90.5% per day. That's crazy SHIT in my opinion. That's some really good numbers. Those are some really, really, really good numbers. Not 4 months, 14 months. Yes, I apologize. I didn't see the 2024 there. Thank you for correcting me, C.A. Radke. I appreciate it. You see, no, it's not a typo. It's you are correct and I'm incorrect. from 8/23/24 till 12/8/25. So not 4 months, a year and 4 months. Big difference. Big, 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 big difference. Now, folks, in trading, if you're looking for that holy grail and you're fearful. So every time you're fearful, you don't figure out what's causing the fear. You just switch different systems. It doesn't work that way. I know we all want it to work that way, but it doesn't work that way. You see, what you're doing if you do that is you're just putting a bandage on whatever you're doing. Don't stop putting a bandage. Figure out what's causing your fear, all right? Most of you have something that's causing you a fear. It's either fear of losing, fear of winning, fear of missing out. There's some type of a fear, and that fear causes you to go on a shopping spree for a different system instead of figuring out what that fear is. Stop doing that. It's not going to yield you any success because you're just going to be going from system to system, strategy to strategy. It doesn't work that way. We've all been there before. Some of us have been there more than once. Some of us have not. It just depends on the person. But I'm explaining to you what you're thinking and what you're doing. And trust me, what I just said has a lot of meaning. You may have to watch it a few times. Now, there's no black box miracle system that prints out winning trades automatically. The whole purpose of this is to give you an edge in the market, okay? If you can't handle losing trades, then you really shouldn't be trading with real money. And I really do mean that from the bottom of my heart. Losers in trading will occur, and they will occur, all right? That's how it works. Embrace them. They're part of the process. Stop trading your next trade. Start trading the strategy, okay? That's some free advice I want to offer you. That's not part of this process, okay? My name is Roger Scott, and today I'm putting my good friend and former Wall Street legend, Kane Shea, to the test, challenging him to open a small $5,000 account and grow it five times, or more in the coming, not one time, 5 times in the coming months, taking the balance from $5,000 to north of $25,000. Now, I know Kane is going to do it. It's not even a question. The question is how long and how long the drawdown will be. It's not whether he's going to do it. I know he's going to do it. And if you want in, you can tag along for the ride, getting alerted to every entry and exit in real time. Folks, I mean, doesn't get better than that. Now, if you've been following Kane for a while, you know that he doesn't like or trade like most people do. He just doesn't. Well, most traders spend their time finding a good stock first and then applying an option to it. That's how I do it. Kane does it the other way around. And it makes sense considering the volume in options these days. 20 years ago, if you told that to somebody, they'd look at you like you're from the mental institution. Now, with the liquidity in options, it kind of makes sense. He starts in the options market to tell him which stock he should even consider trading. And that's because back when Kane was a portfolio manager for a $1.7 trillion firm, he traded over $200 billion per day. He witnessed firsthand how little known force hiding in the options chain can literally control a stock's outcome. I mean, that's some powerful stuff there we're talking about. Regardless of the news, the Fed, or the economic report that hit throughout the day. That's why, after he walked away from Wall Street, Kane dedicated himself to trading this options-based force every single day. Every single day, folks. And the results really do speak for themselves. Not only has he been able to nail top gains like 117%, 178%, 334% in his public trading programs, including bagging a super rare 1,000% return on DXCM. That's bagging an elephant, Kane.
Yeah.
1,122% return. That erases, as T-Bus says, that will erase a lot of sins.
That's true.
But the overall returns were so good and the setups were so accurate that we decided as a team to invest over $250,000 in resources annually as a company behind Kane and his shenanigans. And boy, oh boy, it's worth every penny. Hiring a team of programmers, coders to build out our very own trading terminal to track this force daily, which also helped countless folks across the globe, top students like Kane. Look at this. Petro says, Kane is doing a wonderful job, had 4 wins, and they all gained over 100%. Mazel tov. What's not to love? The process is great. 90% of the trades were profitable. Profits range from 50 to 100%. This guy's not scalping. Love the Ford trade, 250, 310% on 2 trades this morning. Rick, I think you're doing a great job taking high percentage trades while managing risk. Up $3,000. Stephen, and many, many more. It's hard to be upset with making 250% return. $3,000 profit. Thank you, Kane. Look at this. Fantastic stuff. But according to Kane, we haven't seen anything yet. That's because just recently he's been on a major shift, or he's seen a major shift in the options market that's making these opportunities far more frequent and lucrative. And while most folks will likely never hear about it, let alone get a chance to profit from it, this shift has now opened the door for what he says is the most reliable way to target double and even triple digit gains each and every single day. Now, you got to love that, right? By placing a quick trade at any point during the regular market hours, not pre-open, not overnight, regular market hours, and letting it ride until the market closes that same day. For example, like his trade on Monday on October 14th, 77.5% in a single day. The next day on Tuesday, October 15th, 188% over plus in a single day. Wednesday, 44% plus in a single day. And over the last year or so, Kane has been taking advantage of this nearly every single day and sharing this trade results with me too. I'm very excited about this. So far, this daily approach has posted an 88.9% win rate on the active trades, with the average winner currently sitting just shy of 100% on each trade. And that's why I'm officially challenging Kane. That's right, challenging Kane to publicly put him to the test. Put his mouth where his money is, right? Opening up a small $5,000 account and aiming to grow it 5 times, 500% or more in the coming months, taking it from 5,000 to north of 25,000. And today, we're going to invite 50 folks to gain access to his portfolio live in real time, where you'll get alerted to every trade he makes, when he makes it, what he paid, and every exit. Talk about forensics, right? All in real time. That way, I don't want to hear anymore, we missed this, we missed that. I mean, he's literally taking the trade in real time. I don't know what else you can miss. And if that sounds like something you'd be into, buckle up. Because in the next few minutes, you'll see the number one driving force behind this recent market volatility. It's not what you all think it is. It's not what you think it is. Why the biggest Wall Street players are practically arm twisted to control the outcome of the market each day. How little move by the Chicago Board of Options Exchange in 2022 incidentally transformed the way the SPY trades now each and every day. How we can now leverage a little-known market force to target double and triple-digit same-day returns multiple times per week. Plus, Kane's secret hack to day trading without getting dinged. It's how he's been able to do this problem even with a small account, to do this with no problem even with a small account. I'm getting very excited here. Welcome to the 5-time small account challenge. Kane, let's get this party started.
All right, yeah, I'm ready. Let's do it. So, hey guys, I'm Kane Shea, creator of the GX Trading Terminal, and I can't wait to show you what I have in store for you. Today, I want to open your eyes to what I believe is now the very best way to target single day double and triple digit returns. And it's all by tapping into a little known market force that's now controlling the S&P 500's price action on most days. Now, if you've been trading for more than a week now, then you might feel like the S&P 500 kind of moves randomly every day. And given the crazy market environment over the last year, I totally understand why. One moment, the market will open higher and then get blasted all day long. We saw a couple of those this past week. And then other days, stocks might drift lower at the open and then shoot to the moon out of the blue with no news to be found anywhere in sight. We had 1 or 2 of those also. And on other days, we see the S&P 500 post a really strong day and then cough it all up in the last 30 minutes. We saw some of those too. So it whipsaws accounts for seemingly no reason whatsoever. The truth is, since the pandemic, volatility and unpredictability have become the new normal for a once stable S&P 500. And sure, you could blame the chaotic news cycles, the AI craze, global conflicts, the trade war, whatever you want. And you could maybe say that's partly true. But the real story is what's been happening behind the scenes in the options market. Because over the last 5 years, a new force has been rising up in the options market and is completely altering how the S&P 500 moves on a day-to-day basis. And in fact, it's so powerful that it can actually control where the S&P 500 will close that day down to the last dollar. Sometimes we get to a penny. So while the daily price action might seem random to most traders, when you can identify this force in real time, not only does the movement all make sense, but it can actually become predictable. And we can set ourselves up in a great place to take advantage of it. Targeting same day, double and triple digit returns right from any regular brokerage account. For example, take a look at the trade I took on Monday, December 1st. Now on Monday, December 1st, things were looking groovy in the stock market. The S&P was going higher all day long and it looked like bulls were in control. But for reasons that will come clear soon, I was able to pinpoint that the SPY would finish at the 680 level that day with very high accuracy. So I placed a quick trade betting on exactly that. And anyone who followed along would have walked away with a big fat payout of 225%. And the SPY finished right at the 680 price level, down to the last dollar, within pennies. Or how about my trade just 2 days later, this one on Wednesday, December 3rd? On this day, the SPY opened at 681. And for most traders, picking a direction was no better than a coin flip. But not for me, because as you'll soon see, there was a very good chance that SPY would go higher that day, headed to 684, as I noted in my channel. And once again, for anyone following along, they would have hit it out of the park with a monster 221% return by the time the closing bell rang. And some people, they'll pick a direction and they might be right, and they'll only be right for like 15, 20 minutes, and then they'll take their profits or they'll get swung out of the trade. But we're talking about being right all day long here.
I love that.
Pretty unusual.
I love that.
So the SPY closed right at the 684 level that day. And again, it was down to the last dollar. It was within, I think, 10 or 20 cents.
Now, Kane, let me pause you for just a second here. Between those two trades, that would have been enough to start with $500 and grow it into $5,231 in under 72 hours. $1,000 starting over, and you're looking at over 10,000 after two trades. Kane, it takes some people a full year to see those type of results in their account. But anyone following along with you could have done it before the week wrap up. Now, here's the thing. Hitting a few triple-digit winners is great and really impressive for sure. But pinpointing the final outcome of the S&P each day with near perfect accuracy over and over again, that takes a very, very special set of skills, my friend. That's not something you'd normally see from any Joe Schmo off the street. So, Kane, you got to give us a little more details. A lot of people are curious. What's this force controlling the market, and how can we identify it each and every day? I mean, there's a lot of people here who want to know this.
Yeah. So let's remind everyone real quick that there's no magic 8 ball when it comes to investing. So yeah, losers have happened. They will happen no matter how good you are, no matter how good your tools are. And that's why you should never go all in on any one setup, regardless of how good the data looks or how amazing it looks. The key is winning more than when you lose and winning bigger than when you don't. And so far, we've been able to do exactly that, or that on a magnified scale with all the opportunities that we've had. So there's an average winner sitting just below 100% ROI, which is great. And now our success with this trade is a direct result of a new reality that's unfolded inside the options markets. So you see, since the pandemic, options trading volume has exploded. It's to the point where we'll routinely see more options contracts traded on a stock than the shares in any given day, which is crazy. And with the surge in popularity of options trading among both retail and professional investors, the Chicago Board of Exchange saw an opportunity to profit from it by making even more options available. So here's what they did. The CBOE officially announced the release of daily options, also known as 0DTE.
Oh, yeah.
And these are the options that have expiration dates right around the corner, same day.
That's right.
Now, it's safe to say that CBOE hit it out of the park with these daily options, because the trading volume on these 0DT options has grown exponentially over the last few years.
It sure has.
Yeah. As a matter of fact, before the pandemic, you can see right here, there's not that much. The trading volume in 0DT options made less than 20% of all transactions every day. Jump to 2021, that's only 1 year, and it already nearly doubled.
Mm-hmm.
By 2023, it doubled again. And fast forward to today, take a look at that. We're sitting at more than 60% of all options trading volume.
Quite a bit.
So that's nearly 2/3 of the daily volume. It's just in the 0DTE. And here's why that matters. The 0DTE options now carry so much weight that they can actually control the outcome of the underlying S&P 500 price action roughly 9 out of every 10 days.
Amazing.
In other words, the tail is now wagging the dog.
Dog, right.
Yeah. And if you can identify the exact strike with the most volume concentration, you can leverage that data to help pinpoint the closing price of the S&P 500 that day, with oftentimes down to last dollar and sometimes within like 1 penny or 10 cents.
Right.
A prime example of this is the trade I hit on that same week that we've been talking about, this Friday, December 5th. Now, on the morning of December 5th, the S&P 500 was breaking out higher. And it looked like it was going to be a fantastic day in the stock market.
Mm-hmm. Mm-hmm.
However, on the same morning, by looking at the 0DTE options data, well, you would have seen a massive concentration at the 685 strike, like I noted in my Telegram channel. Meaning that there was a really good chance that we'd see the SPY turn and close that day lower, down to the dollar. Mm-hmm. And of course, anyone trading with common indicators and basic market knowledge would have laughed at me. And there is no good reason why the market would just drop 0.5% down to 685, especially with such a strong start.
Right.
Yeah. But once again, that is exactly what happened. And anyone who had taken this trade with me could have bagged a nice 81% ROI before dinner.
That's fantastic.
Yeah. It was the same story the next day on Monday, December 8th. Now on Monday, December 8th, the S&P was getting punished badly. It was going lower and lower all day long.
Mm-hmm.
And for most investors, it was a horrendous day for their account. But by looking at the 0DTE options data, you could easily see that the 683 strike was in control and markets would most likely finish higher.
Right.
So I placed a quick trade betting on exactly that. And sure enough, SPY finished at the 683 level that day.
Amazing.
And anyone who followed along would have walked away with a nice double-digit winner, 48.9% on that move.
Fantastic.
And let me show you one more time with my trade on Wednesday, November 26th. Now, on the morning of November 26th, you could have gambled on the S&P going higher or lower, or you could have simply looked at that 0DTE options data and recognized very easily that the SPY was most likely going to finish at 680, down to the last dollar.
That's right.
And look where the bulk of that 0DTE concentration was, is at 680. Now here's the crazy part. If I made that call at 2 p.m., well, that's not super impressive, as most of the trading day was already over. If I made the prediction at noon, maybe it would have been a lucky guess. But I posted this exact screenshot on my public Telegram channel at 9:47 a.m. That's 17 minutes after the open. That was before any price action really was on the charts yet.
Right.
And telling folks that, I mean, that's 3 candles on a 5-minute chart, right?
That's right.
So we told folks that 680 was our number for the day. And that was the exact strike with the most 0DTE concentration. And even though there was a pretty much nothing else to go off of, we finished right on the money. And anyone who followed along could have hit an incredible 176% payout by the end of the session.
All right, Kane, let me stop you for a second. Make sure I have this straight because this is some really powerful stuff. And folks, I see a lot of questions, which is fantastic. All questions will be answered before we depart. So please hold your questions. Hold your questions. Everything will be answered. No stone will be unturned. All right. First, $1,000 into that last one would have flipped into $2,762 in a matter of hours. $2,500 would have been worth $6,900 by the end of the day. Now, I don't know about you, but I don't know too many folks pocketing a few $1,000 from one day at the desk job. Heck, that's even better than some of the lawyers and doctors that I know. Actually, most doctors, and I know a lot of lawyers and doctors, none of them are doing that well. So, Kane, before we continue, let me make sure I have this straight. You're saying that by pulling all of the options data each day of the S&P, and then specifically sorting for the exact strike with the most volume, we've been able to pinpoint where the SPY was most likely to finish that day. Do I have that right?
Yep, you've got it exactly right. And while that might seem backward at first, there is a very clear reason why this is routinely happening on roughly 9 out of every 10 days.
Amazing.
So the reason these 0DT options frequently control the outcome of the S&P 500 on most days is because of what we call dealer inventory risk. So when retail and even professional traders buy up millions of these 0DT contracts, then the Wall Street dealer or market maker on the other side is selling those options to them. Now, this dealer has an institutional obligation to keep their risk neutralized. And here's how that all works out of the most basic form. If Wall Street options dealers end up with an excess amount of call options on their books, they are obligated to buy the underlying shares in order to neutralize that risk. They're hedging themselves, which can ultimately push that price higher and higher because they're buying the underlying.
Right.
And on the flip side, if the dealers find themselves with a large amount of puts on their book, well, they're obligated to sell S&P shares in order to neutralize that risk. And that aggressive selling can obviously push the price lower and lower. And now to be clear, these dealers are not dumping shares in the way that you and I might think, or we've been taught to think. They're not trying to crash the market. They're not trying to manipulate or push it in any direction. They're simply doing their job of offsetting their risk on the open contracts by taking a position in the opposite direction.
Right.
However, in today's market, with millions and millions of these 0DTEs now traded daily, they're obligated to buy and sell so many shares at a time that it actually is moving the price of the S&P.
Right.
And that's the key to unlocking these single-day payout opportunities in the S&P. Because when we can identify the exact strike price with the greatest concentration that day across all of the options dealers combined, well, that's when we can get a really, really clear picture of where the S&P 500 is most likely going to finish that day. For example, let me show you the trade that I took back in July. On the morning of July 2nd, it was a bit of a chaotic day. We saw weakening jobs data posted in the pre-market, which obviously left the stock market opening down that morning. And I'm sure with a soft open and bad news, and many folks were anticipating that the markets would head lower that day. However, when I ran the options data that morning, it told me a very different story. Because as you can see, on July 2nd, the 0DT options were heavily concentrated at that 620 strike price. And that means across all of the Wall Street options dealers out there, across all of the 0DT contracts, 620 was the strike that dealers would be most obligated to neutralize. Meaning that they would need to buy shares of S&P 500 like madmen in order to offset their risk. And so I placed a quick trade that morning to take advantage of it. And sure enough, the S&P finished right at that 620 level.
Isn't that something? I love when that happens.
Yeah.
I love when that happens.
So that was enough for a healthy 75% on my trade for that day. And it was the same thing just a few days later, after the long weekend and enjoying the 4th of July wrapped up. On Monday morning, I opened up my trading platform. I ran the 0DT options data like I always do. And this time you can see that 0DT options were heavily concentrated to the downside. And across all of the 0DT contracts, across all the Wall Street options dealers, 621 was the most concentration, or the strike with the most concentration.
Right.
Now, that simply meant that dealers were now obligated to sell shares in order to offset their risk.
Right.
And again, they're not trying to tank the markets. They're not trying to manipulate anything. They're just doing their job. They're just neutralizing their book. So had anyone placed a quick trade that morning like I did, well, they could have come back to see that SPY finish right at our 621 price, and that our trade banked 201% in that single day.
Kane, again, that's two great results, but maybe even more shocking than double and triple digit numbers is the fact that you called these moves before, I'm going to use that word again, before there was any price action on the chart that day. That's pretty miraculous. That's like my Picasso drawings that I do once in a while. That's pretty good. Yeah. The first one you posted only 8 minutes into the trading day, pinpointing the exact outcome of the day before most traders even had an idea if we were going to go up or down. And of course, nailing it on the head. Then on the next entry, it wasn't much different. This one got out, folks, at 10 o'clock in the morning, predicting the final outcome of the S&P down to the dollar while most folks were still on their first cup of coffee, and then smashing it out of the ballpark. Again, look at this 200% return. Kane, I feel like you're a magician able to predict the future here. And more importantly, you're getting it right over and over and over again.
Yeah, thanks, Roger, for those kind words.
It's the truth.
Yeah, thanks. Of course, I want to take a moment to remind everyone that no strategy wins 100% of the time. And we don't claim to do that here either. So please understand, there are going to be winning trades and losing trades as well.
Of course.
Yeah. So with that said, there's a reason that these daily signals have been working with such high degree of accuracy, posting winning outcomes nearly 90% of the time. You see, under normal circumstances, there's no way that just one of these Wall Street firms would have enough money to move the entire S&P 500. And the S&P 500 is a multi-trillion-dollar market, so it's no chance.
No.
But we're not talking about just one guy with a checkbook. It's a whole herd. It's Goldman, it's Morgan, it's Citadel, it's Virtu, all running the exact same risk management model.
Yeah, and I think that's Kramer all the way on the left, by the way. That's my theory. I'm sticking to it.
And it's not just those big guys, too. There's dozens and dozens of firms who are involved in the market making.
Right.
And between all of them, there's a boatload of 0DT contracts on the books. And in fact, the average daily volume of the S&P 500 options sits at 4.8 million contracts each day currently. So put that into a dollar figure on how many shares of the S&P 500 that can influence, well, that's a daily notional of $3.5 trillion just in the options.
That's something.
Now, that's why we're seeing the 0DT options market absolutely dominate and control the outcome of the underlying S&P 500 on most days. Because what I'm showing you is not just one firm with a large position on the books, it's all of the dealers, it's all of the contracts combined and netted out across the entire market. So that way we can see where the true imbalance is in the market, telling us where the S&P 500 is most likely headed with pinpoint accuracy down to the last dollar. For example, my trade on June 27th. This time the S&P 500 ran higher in the morning and then lower in the afternoon. Now you tell me, with price action like that, where do you think the S&P 500 is going to finish? Seriously, just take a stab at it, put it in the chat. Where do you think it's going to end? And don't look up. Don't look it up on the chart. Don't cheat. Well, I think we can all agree that picking the outcome just by looking at this chart, what can you go by? It'd be really tough just by looking at this chart. However, by looking at the options market across millions of S&P 500 0DT contracts, there's a clear standout right there. After netting out all of the calls and puts and strikes, we see that the 615 is where where all of that exposure is. It's very obvious here. And that means that Wall Street options dealers would be obligated to buy millions of shares of the S&P 500, offsetting their risk and in the process pushing the price higher in the markets. And sure enough, look where the markets finished that day, right at my mark, like that. Just anyone who placed that quick trade like I did could have locked in another triple-digit winner with 177%. And I can show you countless examples of this. Look at Tuesday, October 28th, 687 strike, paying out double digits in a matter of hours, 71.7%. Or Wednesday, November 5th, the 678 strike. This one hit an 85% gain by closing bell. Or December 16th at the 680 price, 147% banked by the market close.
Kane, it's getting to the point now where I'm genuinely not even surprised anymore when you hit your payout. I mean, it's happening over and over and over again down to the last dollar. And the way I see it, by simply seeing how people are flocking to these zero DTE options, the trend is only accelerating. And this market force is only going to grow stronger and stronger. Without a way to track it, you're just flying blind. But with this data in your hands, the possibilities are endless. And Kane, I'm not just blowing smoke here. I've seen the data we've been sharing in real time in your public trading channel, and I've seen your trade tracker too. So far, you've been hitting these trades with an 88.9% accuracy, with the average winner currently sitting at just shy of 100%. And all in all, when you stack it up with only 2,500 starting on each, with zero compounding, that's over $102,000 in net profit over the course of the last year. With results like that, it wouldn't shock me if you hit your 5 times challenge goal twice as fast as I originally imagined. So Kane, tell us, how can we get in on the fun?
Well, Roger, you obviously can't track zero DT levels on the back of a napkin. It's not that simple. And you can't really even tally them up by looking at your standard options chain either. So in order to take advantage of them, you would need to know the net amount and not simply totals at each strike. But luckily, my understanding of computer science and math came in handy for automating the whole process. And it's still a bit tedious running the custom Python script as the complex code takes time to process all of the data. But it's more than worth it, because we're able to tap into the biggest single force controlling the S&P 500's price action, and use that data to help us pinpoint exactly the outcome of the S&P 500 each day with near perfect accuracy. And that allows us to land some of the most consistent double and triple digit daily returns that I've ever seen. Now, unfortunately, access to my daily trade is not available anywhere online. You can't find these trade alerts anywhere. You can't buy the service anywhere.
I can't buy this?
Instead, they're locked behind closed doors.
Closed doors, okay.
Yeah. And reserved exclusively for my all access members.
Gotcha.
These are the handful of students who get full access to everything my team and I produce. And that includes the 5X small account challenge that I will be starting at the new year.
Love that.
And the all access students, they can follow along with every entry and exit I make, alerted in real time. They'll get this exact dashboard so they can see everything anytime they want to.
Can't wait to join you, Kane. Can't wait to join you there.
Yep. And so we're going to attempt to grow that $5,000 account to north of $25,000 in the coming months.
Love that.
With alerts coming directly to the private Telegram channel right on the website as well. And so the way that works is the moment the trade goes, you'll see it on that dashboard and it sends a Telegram alert out at the same time. So you may have heard me say recently, spots to my all access membership have been closed to the public for a good while now.
No soup for you.
But today I'm finally ready to onboard a few more all access members and kick off that new 5X challenge. Now, this will be a very limited group. So if you're interested, let me walk you through what it looks like to become a member to the Kane Shea All Access. The All Access membership is my most elite level of access, where you get all of my software and strategies, plus other perks that no one else in the world gets access to. And this membership is worth over $75,000 easily over the next year alone. But this isn't a one-year membership. That's because not only do you gain access to all of my current premium trading products for the next year or two, with all access membership, you're automatically upgraded to lifetime access for everything that I currently publish.
Right.
Which includes VIP lifetime access to the Maverick Indicator.
Ooh, I like that.
The Gamma Payouts program, the Weekend Trading Club, the Morning Payout program, the GX Trading Terminal, QuantX alerts, but that's not even the biggest perk.
That's not even the biggest perk?
It's also lifetime access to everything I produce in the future as well, which
wow.
How can you put exciting. A price on that? That's easily, oh come on, 20,000 is not, it's way more than 20,000.
A lot more than that. Yeah.
It includes immediate updates on new market breakthroughs, and including unfiltered access to the 5X small account challenge, where I'm opening up a small $5,000 account and aiming to grow it 5X or more in the coming months. You know, it started out as 2X. And then when Roger and the guys looked at it, they're like, come on, Kane, that wouldn't even be, you can't call it a challenge if it's 2X.
Yeah. Now
so we changed
challenge.
it to 5X.
Exactly.
So spoiler, I'm also going to show you how I can day trade without getting dinged by the pattern day trade rule.
Now, let's repeat this because we've had a lot of people asking this. So I'm going to repeat this again for all the people asking. He's going to show you how you could do it without violating the day with a small account, without the day trading requirement. Okay, so stop asking us that. He's going to show you how to do that too.
And as a member to my all access program, you'll instantly get the entry and exit alerts via Telegram. Excuse me. But of course, that's just the tip of the iceberg for all access members. Because as a member, you'll get all of the future releases too, and there's some amazing stuff coming down the pipeline. Ooh. For starters, we have the performance panel. So over the coming weeks, my team and I will be releasing a trading tool that will actively rank all of my trading programs to help you identify the right market environment or the right program for the current market environment. So it'll help you filter out the best of the best at any given time versus feeling like you have to take every single trade from every single program and stuff your portfolio full of like dozens and dozens of trades. So it ideally helps you smooth out your growth curve as well, only trading the programs that are, I wouldn't say currently in a big time hot streak, that are appropriate for the current market environment.
Right.
And also the 0DTE dashboard, which I'm pretty sure some of you will ask about this. Like, how is Kane doing this on the 5X challenge? How is he pinning this every single day? Well, we're going to release a 0DT dashboard so you can see exactly what I see. So we're working on that tirelessly. I can give you a preview during the Q&A if you want to on what we've come up with so far, but that is coming down the pipeline for all access members. So it will not only give you the levels for that day, but it will give you actionable trades as well on the SPY, SPOX, and more actually, anything you care to look at. The tool alone is easily worth $99.95 for lifetime access as long as it exists.
Love that.
And there's more.
There's more?
There's more. We have Pinning Alerts Pro. This will be the retail version of my 0DT trade alerts when I bring them out to the public, but also not just 0DT, there'll be swings as well. So we can pin the price on a 0DT basis, but we can actually pin the price on a few days or a weekly basis as well. Beautiful. So right now you can't access that anywhere.
Wow.
And you have the Overnighters Club. Overnighters Club is a unique method that I've been testing with 0 and 1 DTE gamma on popular tickers like Apple, Nvidia, Tesla, and more, specifically trading overnight options from Thursday to Friday. And it'll be action-packed, shooting for 100% plus moves overnight each week.
Beautiful.
And that's just what we currently have in the pipeline. There's a few other ideas that aren't fully developed yet, but those are the ones that are developed enough for us to actually tell you about. So we've got a whole bunch of additional tools, scanners, portfolios to build down the road. You may have seen my my survey a couple of weeks ago where I said, hey, do you guys want this or this or this or this? There's a
I
lot of
love that.
ideas coming down.
Now,
Yeah.
Kane, this is adding up really quickly, and we haven't even discussed the 5x trading challenge either, the 5,000 sticker price, let alone the ongoing cost that you and the team have to pay annually out of pocket. That's over 250K. So all in all, it would have easily run over 100,000 if someone wanted full anatomy to all of your best strategies. But honestly, exclusive, real-time access to these zero DT trade alerts is worth more than that. It's already shown the power to pay north of 100,000 in just over a year. So, Kane, what are you thinking for the price? Talk to me.
Well, so before we talk price, let's just remind everyone that entry to my all access program is limited. In fact, I'm only aiming to bring around 50 new members before shutting off today's deal.
There's almost 600 people here, Kane, just so you know.
So, like you hinted a moment ago, to keep everything running, plus the ongoing development costs, well, it runs us $500,000 in annual expenses.
Actually,
That's
probably a little bit more.
probably more. And you add on lifetime memberships, that's they say 25,000, but come on, realistically over a lifetime, that adds up a lot.
Right.
Plus, we've got future developments. That's worth, I don't know how they come up with these numbers, but it's got to be worth more than 30,000.
Absolutely.
Yeah. So that amount will only continue to grow in the future as my team and I continue to produce new and actionable methods. So when I say that this membership is valued at over $75,000, I'm dead serious, especially considering the lifetime aspect to it. However, today I'm opening up 50 spots to join all access membership at the best price you probably may ever see. So here's the plan. We've set up a very limited online special for you today where you can access everything that we've talked about.
Wow.
Yep. Claiming your membership to the most elite trading club that we offer, and lifetime access to all of the current software and strategies, including all future developments of the strategies and software. So to me, the software is pretty exciting for free, but the programs obviously as well. But the software that drives the programs, I think that's the real meat that a lot of people want. Plus, even more all access member bonuses that we didn't even get a chance to cover today, including, in that 5X challenge, right? So for only $20,000 for the limited online special.
You're being extremely generous here.
Yep. So here's why I picked that price. So just let me explain that real fast.
Of course.
Yeah. If you take me up on today's special offer, you'll have instant access to my 5X challenge, where I'm aiming to take a small account from $5,000 to over $25,000. And naturally, we can't promise future returns or against losses. But my thinking is that if I hit my goal, that's $20,000 in profit, meaning that you'll get a legitimate shot at having your entire lifetime access fee covered, 100% covered in a matter of months.
Right.
And given my track record in my pilot testing, I don't think that's by any means out of reach.
Not at all.
From there, everything else is just gravy on top.
Kane, let me make sure I heard you right. Make sure I understand everything. You're giving away to everything you do, past, present, and future, with lifetime access for years and years to come, as long as they exist, for only $20,000? And then you're going to use your 5 times challenge to then essentially help them pay off the whole fee? Folks, that's like having your cake and eating it too. And Kane, you're only allowing this for a limited time and are only aiming to bring on 50 new members today? That's going to be easy. But I really think you should consider increasing the price, especially with all that you have coming down the pike. And as you know, there's inflation on the streets of America.
Well, Roger, just wait until you see what I do next. You're going to blow your top.
I got to get my heartburn medicine ready.
It's about to get even better for folks.
Oh, boy.
First off, Roger, I took notice when you announced your all access program and the deal you gave the first action takers. And I want to do something similar by slashing my price a few $1,000s for the first 50 people in the door. So for starters, I'm going to match the discount that you gave your students a few weeks back.
Oh, mamma mia.
Whew. And immediately take the membership cost down from $20,000 down to only $17,995.
Okay, all right.
Then I'm going to take it to the next level.
Here we go. I need my antacid here.
for the $5,000 fast cash credit for the 5X small account challenge. Okay,
I
so when you upgrade today,
I protest.
not only will you get instant access to the private 5X small account challenge with entry options and exit alerts included in your all access membership, but since we're starting with $5,000 in my account for the challenge, we're starting with a $5,000 account. I wanted to give you that $5,000 fast cash discount automatically applied to your order, and that way you can get started at the same level as me. You take that 5,000 that you save and just open another account and start with me. However, this credit is only available to the next 50 or first 50 who take action in this. And that means when you join today, right here in this room, it's not going to be $75,000 or $17,995. You're going to get the $5,000 fast action discount as well. So all access, remember, this is all my programs now and in the future for a lifetime.
Wow.
For $12,995.
I can't believe you're doing this, Kane. This is craziness. This is madness. This is insanity.
So with the thought of having a shot of paying off the entire lifetime fee in rapid order, right? And to make it much easier to get you guys started. That's why we're doing this. So another way to help you out, we are going to split the payments in half for you. So you don't have to pay the whole thing today. If you don't want to, you can put half of it down, $64.95 down today, and then the second payment will be auto billed 30 days from now.
Very nice
just to
of
make
you.
it easier. Yeah. And that way there's no reason why you can't get started today.
Kane, again, this is just way too good of a deal. I'm speechless. And for me to say I'm speechless is tough. I'm always saying something. And I'm going to say this once. I've seen a lot of my students in the room today, and if that's you, hear me out and hear me clearly. If you're one of my students, you need to jump on this, because not only will you probably never see a deal like this again, but you're not going to get a shot to see results like these anywhere else. And these 0DT trades pair perfectly with everything that I do. So folks, now is the time to act. If you're serious about trading, nothing beats Kane's All Access Pass. You're unlocking lifetime access to all of the top software and strategies personally used by the legend himself. You're saving tens of thousands every year compared to the full cost, accessing all the future goodies, developments, lifetime access for free, and getting perks that no one else in the entire world will have access to. It's an incredible discount, will not be open for long. This is a limited time exclusive offer for Kane's most loyal students, and only the first 50 who take action will get the additional $5,000 fast cash credit. So if you're ready to get started and ready to take one of the 50 spots that are open, only $64.95 due today. Holy moly. Go to tradingpub.com/5x or click the link in the chat now. Stop messing around. This is a deal that's too good to pass by. Remember, folks, as an all access member, you'll gain instant access to Kane's 5-time small account challenge. That means not only will you have private link to view his current and closed portfolio in real time, but you'll also get a private link to join the Telegram channel where you'll be alerted to each trade. That way, if you want to follow along and take the trades with Kane on the journey to 25,000, you can. That's right, you can. And of course, it's available now. And of course, that would be more than enough to cover the cost of the most elite trading package you could possibly join. And given your track record in the pilot testing, I wouldn't be surprised if you hit 2 times your goal. Kane, this isn't just giving folks access to your best material. It's almost like you've almost paying the fee for them. But remember, these 0DTE trades are not currently available anywhere else, not online, not in any other program. This is a special perk reserved for the folks who are the most serious about their trading and taking things to the next level. That's the All Access Club. Only $6,495 due today. Look at this. You're amazing. This morning I cashed out 7,000. Henry, I'm up 10,000. Mike, oh my word. This year makes up for it. $1,000 day. Jason, Tom. Just want to let you know, I bought 275 calls. I made $80,000. Woo! I started taking Kane's trades. It's a no-brainer. Buy all of his services. And folks, the team will call us if you have questions. 904-706-3539. Remember, there's close to 500 people here, and there's only 50 spots left. So you don't want to miss out on this. You really, really do not want to miss out on this. This is a fantastic deal. The short answer is no, but in reality, you should be very happy about that. And here's why. First off, we're looking at $75,000 plus value here with all access pricing plus all future products for free. And just looking at what's ahead, that's 25,000 plus in savings over the next 1 to 2 years alone. And of course, the 5 times small account challenge. But secondarily, and more importantly, up until now, the all access pricing started at $40,000 and upwards, backwards from there with the team. And that price has only increased over time. So even if you already own everything at a VIP rate, you're still looking at over $20,000 plus to join. All right. Of course, it'll continue after you you reach 25K. However, with today's special, you don't need to worry about starting at 40K and hoping you have enough credit from other subscribers to bring the cost down. Instead, starting at $17,995 across the board. And on top, he's doing a limited time discount on his all access with an additional $5,000 instant credit for the first 50 signups, taking it all the way down to only $12,995 for the action takers today. All right. So what would you rather pay? Normal cost with all possible discount applied, $20,000 plus. And again, if you own everything VIP, if you only have a few strategies, it would be much, much higher. But today's special for the first 50 members, and remember, that includes lifetime to all future products as well, which will, over the next year, will be worth extra $10,000 easy. Easy. All right? Easy. So I highly recommend taking action on this very limited discount offer, because the next time we run it, I can almost guarantee the price will be thousands higher. Kane, only $64.95 today. Holy moly is what I'm going to say. That's what I'm going to tell you. Holy moly.
Yeah, so I can't wait. I can't wait for the stories to come out of this. I think, Roger called me a legend. I might be a legend for something else once we finish with this 5X challenge. So I firmly believe that with the 0DT trades in the 5X challenge, hitting your goals will be easier than ever before. And there's one more bonus that I do want to bring up today. You see, right now we've set the limited time discounted price to $12,995 to join my most elite membership available, where you have lifetime access to absolutely everything I do, plus lifetime access to everything that I do in the future as well. And to make it easy on you, we are splitting up the payments.
1 second here.
Sure.
Yeah, if you have a question for Kane that's not directed at this directly, email him. This is not the time or the place. Sorry, Kane, I didn't mean to interrupt you. Go ahead.
No, all good. So we've got $64.95 down today and the other $6,500 in 30 days to help you out.
Right.
However, if you want to, you can save another $1,500 in cold hard cash today.
Oh, boy.
So if you take your membership, you will be redirected to another page. And on that page, you can choose to make the second and final payment today. So if you pay for the whole thing today, instead of covering $6,500 for that second payment, it'll be $1,500 off. And so if you want to pay that today, it'll just be $5,000.
Beautiful.
Yeah, so that you save $1,500 on the membership cost, and you can apply the savings to your next trades as well, if you'd like to. Mm-hmm. So again, that's the Fax Action deal. It's only guaranteed if you take one of the 50 spots that are open.
Right.
Yeah. And after that, price is going up, but that's a promise. I mean, I can't sustain a business of giving absolutely everything that I do now and in the future for only, like $12,000. There's only so many people I can offer that to. Otherwise, I'm going to be working as a slave to everyone for the rest of my life.
Folks, so $64.95 today only. Kane, this is a deal that's just too good to pass by, in my opinion. It's just too good to pass by.
Yeah. So, and keep in mind, guys, that when you lock in your membership today, you not only get a lifetime membership to everything that I currently publish and produce, but you get lifetime access to the Maverick indicator, which is awesome, the Gamma Pocket payouts, the Weekend Trading Club, the Morning Payout Program, the GEX Trading Terminal, which people are absolutely loving, and the QuantX alerts. That's
I love
already
that.
over $19,000 of value.
And Kane's going to be releasing quite a lot of stuff, as he showed you, in the coming year. 2026 is looking very, very, very sweet.
That's right. So as Roger said, there is more.
There's more?
You also get lifetime access to everything that I produce in the future. That's what Roger was just alluding to. And for starters, we've got the unfiltered access to the 5X small account challenge, where we're opening up a small $5,000 account and aiming to grow 5X or more in the coming months. And you get to see that real time. We're going to take it from 5,000 to north of 25,000. And I'm also going to show you how I can do it without ever getting dinged for pattern day trading on a small account. 5,000 is still considered a small account. And as a member, you get instant entry and exit alerts via Telegram. Everything is hooked up. You may have seen me testing on that all access channel. Those of you who are already all access, you see all me testing over the last week and seeing these alerts going out. But of course, that's just the tip of the iceberg for all access members. We've got the performance panel that's coming up that will help you decide which programs are best for the current market environment. That is a $5,000 VIP value already, just from that. Yep.
Right.
And also, we've got the 0DTE dashboard. This is where you can see everything that I see. 0DTE, my team and I are working tirelessly to take my 0DTE process and my data and make it available to everyone. And it will not only give you levels for that day, but we'll be able to give you the actionable trades on the SPY, SPX, and whatever symbol you might want to put in there.
Right.
And there's more. We have the pinning alerts that we told you about. So we can pin not only on 0DTE, but other time frames as well. We have the overnighters, where we're looking for Thursday to Friday overnight trade, targeting 100% plus. And that's just what we currently have officially in the pipeline. There's way more than that. We've got a huge list of tools and scanners and softwares that we can build down the road. And my point is, you're getting $25,000 plus in savings over the coming just 1 or 2 years, plus a shot to cover the entire fee and more if I hit that $25,000 goal.
Love that.
And you're getting it for only $12,995 for the first 50 people who are coming in.
Exactly.
And to make it even easier, only $64.95 is due today, and then you're in for the All Access Plus, the 5X challenge. And I hope you guys can see I'm trying to make this as good as possible for you guys, and it's easy to get started as I can.
It's amazing. I love it. Folks, take advantage. Get in now. Only $64.95 due, and you're paying, if you get in today, you're paying only $12,995 for all of this. This is amazing. All right. I'm sure we have a lot of questions. Deanna, do you want to read the questions for us? Or do you want me to tell you what the questions, you want to tell me what the questions are so we can answer them?
Yeah. Give me one second.
Thank you.
And I do want to just specify, guys, our team is working right now, so they are able to answer any questions on the phone as well. We have a full team right now.
Yes.
Okay. Kane, this is a common one. Do all of your previous All Access members get anything with this? So your members who already have the Diamond All Access.
So everyone who has Diamond Access, they get the 5X challenge and everything going in the future as well. So that you're good. If you're already at All Access, you're good. You get absolutely everything. Yeah,
absolutely.
And do these programs focus on the SPY only? Can you trade ES and other signals?
The 5X challenge will show you exactly what I'm trading in real time. So whatever I trade, it's going to alert you. If you then want to translate that to a different instrument like ES or something like that, then you'll have to do that translation yourself. Could we trade other things like NDX or QQQ or IWM? This does work on those things as well. But so the 5X challenge is predicated on 0DTE. So right now that's QQQ, SPY, SPY, SPX, NDX. There's only like 5 or 6 that offer you every single day. But on Fridays, for example, we could widen out and do a different symbol as well.
And folks, you want to trade the major indices. You want to trade the
Right.
major indices because that's where the liquidity is.
Exactly.
Okay.
And where that huge volume on a daily basis, it's concentrated in those indices.
Got it. Got it.
Perfect. And how are members going to be able to access the 5K, I'm sorry, the 5X challenge?
So what members will, in your one click, you will get a link to that screenshot that you guys saw of that dashboard, that live dashboard. And so you just go into one click, you pop that open, and you'll see live those numbers changing as trades happen. But you don't have to do that because as those numbers get updated live in real time, they also trigger automatic trade entry and exit signals that go to the all access Telegram channel. And so you'll be able to see that. You get alerted on Telegram as well. That's probably a little bit easier. And then if you really want to, you can log into one click and then type, go to the one click trade alert. But I think it'd be moot by the time you did that. You'd already got it on Telegram, the full details on Telegram.
Wow. Okay. So it looks like those are actually our only questions other than people wanting to email you.
There's, I think there's other, and folks, you could do this in your IRA account. It matches perfectly with with all of Kane's other strategies. Kane will tell you exactly how, once you're in the program, he'll tell you and teach you exactly how you could do this without accessing without having a $25,000 account. Okay, he will explain that to you. He will teach you all of that stuff, and you'll be able to follow along with. Here's where I had a question: are they going to only be able to follow along with this new program, or are they going to be able to follow along with other programs in this live follow along kind of stuff? I'm not talking about the new program. I'm just talking about the following along part.
So the dashboard, that live dashboard, is specifically looking at the $5,000 account where we're running the challenge. And I may take an occasional trade from other programs. I mean, it's all access, so I could do a Gamma Pocket or a Quantex or whatever. We might do some of that in that, but we're going to focus mostly on the 0DT in that $5,000 account. Did I answer your question?
I think so. How often does a trade for the new program? How often are the trades going to be given?
1 to 2 trades per day.
Wow.
And some days we might skip if something weird is going on that day.
So, but typically just on average, 1 trade a day.
Yeah.
That sounds reasonable. I mean, that makes a lot. Not like once a week, but once a day. So yeah,
once a day.
Yeah. That let me ask you this question. You already answered it. You're going to teach people exactly how to do it. And also, folks, keep in mind there's right now they're changing the whole margin cash stuff. They're going to so this $25,000 requirement is going to be by the wayside, in my opinion, much sooner than later. I don't think it's going to be a major requirement. Now, can folks start with a small account?
Yeah, so if 5,000 isn't small enough, then you could scale down my trades to whatever.
So if they wanted to copy your trades and they only have $2,500, they just have to risk half with whatever you risk half. Okay, but it's doable. It is doable.
It's doable, absolutely. Yeah.
Okay.
So a lot of the trades are, they're ranging from like 50 to 150 or $200 for most.
Okay, trades. So Beatrice, you could do it with a small account. Beatrice was asking if you could do it with a small account. How much smaller? You could do it with a $2,000. If the average trade is $100 to $200, Beatrice, you could do it with a $2,500, $2,000 account. What percentage of the D's trades have hit? What percentage of the 0DT trades have hit? What's your win rate? I think you already mentioned it, like 9 out of 10.
Yep. Yeah, right around just like 89 point something.
He hits them. He hits them. He hits them hard. They hit hard. How much is Kane going to invest in each trade? That's a
I'll
good
discuss
question.
that. Yeah, that's part of the teaching. But if so, assuming a $5,000 account, I will teach you guys exactly how I am deciding the allocation per trade. So that's part of me teaching you the portfolio and the risk management. So I'm using this as a tool to teach you how to actually control and manage risk in your portfolio as well.
Right, right. Max, well, if it's a couple of $100 per trade, I would imagine that would be. Do you let them go to zero, or do you let them?
I am willing to let them go to zero, and that
Okay.
has happened in the last year or so. A couple, not very many, have gone to zero, but some of them have. Yeah.
Look at this. Somebody here wanted to visit us and say hello.
Oh, hey, is that Bonnie?
That's Bonnie. Say hi, Bonnie.
Hey,
Hello.
Bonnie.
Come over here. Hang out with us, Bonnie. Hang out and say hello. Sorry about that, folks. He hears me and he wants to be with me at the office, so he's a nosy cat. So, folks, and keep something in mind: the deal that Kane is giving you is like it's mouthwatering. When I first saw this, when I was hearing this, I thought this was going to be like 30K, 40K. When they started talking about 12K, and Kane is a frisky rascal. He's got a lot of things up his sleeve for this year. What is the refund policy? Do we know? I think it's. I honestly don't know what the refund policy is. Oh, Deanna just said it. It's 3 days. Thank you. I appreciate that, Deanna. Thank you. I have 8 pets. I have 4 dogs and 4 cats and a lizard. It's not mine though, but it's my wife's. But anyways, yeah, I'm. That's why I have to. This is why Kane and I have to trade for a living. This is why we got too many animals to feed. I was watching, Kane, I'll just take a side note. I was watching Christmas Vacation the other day, and he's with his cousin in the supermarket, and they're just loading up dog food in the thing. And I'm thinking, that's me. This is what I do. Anyway,
I was at Costco the other day loading up on pet blankets, just like
pet blankets. Exactly. So, anyways, getting back to this, folks, you could do all of these strategies in an IRA account. You don't need a huge account on this. You don't need. It includes the GEX terminal. It includes everything Kane currently has. Look at this: Quantex alerts, the small account challenge, GEX terminal, Gamma Pockets, Maverick, Fast Cash Credit. Morning, I can't see that. Something
morning
playbook,
payout program,
and the trading club. That's a lot of stuff. Plus all his boot camp. I mean, this is all Kane. Kane has been at the pub for a little over a year now. Okay, for a little over a year. Look at how much Kane has produced in just that period of time that he has been with us. I mean, that's a lot of. That's a lot of goodies, and he's just getting started. Take advantage of this, folks. Don't miss out on this opportunity. It is a beautiful, beautiful way for you to save money and get a really good deal in a very in an opportune time. Because once holidays are over, that's it. No soup for you. This thing is going to be done. So my 5 cents is. Don't wait. Don't delay. Don't procrastinate. Jump on this before I talk to Kane and talk some sense into him about really charging what he should be charging for this and not a penny less. And this is the master classes will be. When are you having the master class? Can you tell me?
God, I don't think we scheduled it. So I'll talk to Deanna about it. We'll have the master class before the new year, before the challenge starts. So that way everyone's set and ready to go. On the new year.
Yeah. So this is going to be fantastic, folks. Get ready, get set, get go. Now, Kane, do you want to? A few folks asked for your. Do you call out, put some calls in order? Are you Oscar? Send him an email. Speaking of which, a lot of folks want to reach out to you. I always give out my email. Do you want to give folks your email address so they can ask you? They can reach out to you if they have questions.
Absolutely. It's kane@investpub.com. I'll type it for everyone as well.
She already did. Thank you. And you did too.
You.
Now, folks, it's not the Invest Pub. It's just Invest Pub. I got an email saying Kane never emails me. And I looked at the email and I'm like, of course he never emails me because he's not getting your email. So not the Invest Pub, just Invest Pub. Please reach out to him. please reach out to him. He will help you any way he can. And if you have other questions, please feel free. Please feel free to call us at 904-706-3539. Talk to one of us, our customer service agents. They will help you. And if for some reason you can't get through to them, email me and I'll forward your email to Kane. I'm around. I mean, my life is very boring. I trade and I'm a cat daddy pretty much. It's not a standalone service. It's part of a program. And I think, Kane, I think this is just a really good faith effort on your part to make this fantastic, to make this just a fantastic way to get people into your program. It really is. It really is great. So I really appreciate you doing this and taking your time to get people involved in this. I think they're going to love this. Is there a customer service sales email address? I would just call them 904-706-3539. Folks, thank you for being here. We really appreciate you very, very much. If you have any questions, let us know. The spots for this are very, very limited, and there's just not a lot of spots left. So take advantage of this. You could do this in your retirement account. Kane isn't going anywhere. Think long term. The best traders who survive are not traders who think about the next trade. They think about the next 30 trades. Okay?
Yep.
30 trades. So don't think about the next, think about how this will benefit you over time. Matthew, he talked about return on investment, winners and losers. He talked all about that in the beginning of the presentation. I believe there will be a replay posted all weekend long. And if you have any other questions specifically, that if you watch the replay and the questions are not answered, please, customer service is available right now. They're available right now. They will help you every step of the way. Bernadette says, I'm so happy that I'm a member. Thanks, Kane and Roger. You're welcome. You're welcome. It's at the chart 79 point. No, I think it's higher than 79.2. I think
you take the losers and winners combined, it's 79.2. Yeah. No.
This thing is a beast. This thing is a beast. All right. Yeah. All right. Thanks, folks. Soon you'll get the date for the class. And thank you. You're welcome. And Deanna, thank you for being here on a Saturday. We appreciate you. Matthew says tremendous accomplishment, Kane. Folks are very happy, very, very pleased. And NCG says, how do you get an extra $1,500 off? By calling customer service now. They'll explain it all to you. Call them at 904-706-3539. Kane, I hope you have an amazing rest of your day. Rest up because you're going to have a lot of work and a lot of obligations. No pressure. Yes. Have a great weekend, buddy. Thank you all. Have a great day. And if you have any questions, email me. I'll gladly answer them for you. Right. Bye, everybody.
If we miss anything, email me or Roger. We'll be happy to.
Yeah. We'll see you guys. Bye.
Right. Bye, everyone. Thank you. And thanks, Roger.
Okay, folks. Well, this is Raleigh back with you. That was a recording of a presentation that was made this past Saturday where we first introduced Kane's All Access program to everyone. So once again, I want to thank you for being here. I also want to let you know I'm going to be here for a few more minutes to make sure I answer any questions that you have. And I do want to let you know that if you would like to have a link to a copy of this presentation, all you have to do are three things for me, folks. Give me your name and your email address and say, send me the replay. Now, I'm going to make the chat panel just private now. I'm the only one that will see your information, your email, etc. And so once again, if you'd like to have a replay of this, just give me your name and your email address. I'll get that to our customer care department and they'll send you a link to this right away. This once again was a recording, so it should be immediately available to you. Now, the other thing I've done is just done a very, very quick summary as to what this program is. It's extensive, and it is Kane's All Access program. And when you lock in this membership, not only do you get a lifetime membership to everything that Kane currently publishes, so all of his current programs, which includes the Maverick Indicator, the Gamma Pocket Payouts, the Weekend Trading Club, the Morning Payout Program, the Gamma Exposure GEX Trading Terminal, the QuantaX Alerts, The total price, if you've got VIP to all of this, is $19,063. So once again, if you, and that's the discounted price. If you got the discounted VIP price to everything that he had, you'd have a $19,000 investment. So this program includes access to everything that he currently has, but you're also going to get lifetime access to everything that he produces in the future as well. And from that standpoint, let's take a look at what he's got on his plate. Number one, he's going to be giving you unfiltered access to the 5X Small Account Challenge. This is where he's going to open up a $5,000 account and he's going to provide you with 1 to 2, maybe on some days, 2 trades every day. You're going to be able to see exactly the trades that he's taking with the goal of growing a $5,000 account all the way to 25,000. So once again, you're going to be able to see everything, the trades that he take. You'll have access, to his trading portal there, complete transparency on everything that he's doing, and you're going to get those trades in real time. And once again, he's looking at building it from a $5,000 to north of $25,000. One thing that I really like about what he's doing this for people that join the program is that if you follow along with Kane, this program by itself is going to more than double your investment in this program just by following this one program right here. If you did nothing but go ahead and take the trades coming from the 5X challenge, you're more than going to double your investment in this program, and that's in less than a year. Okay. Now, he's also going to show you how, one of the things that we're doing here is we're going to be doing a fair amount of day trading, and he's going to share with you exactly how you can day trade this program without having to worry about the $25,000 pattern day trading rule that you have to have if you're trading on margin. He's going to share all that information with you. And once again, as an access, you're going to get everything. Once again, when he places a trade, you're going to get the exact alert, the exact trade that he's taken so you can follow along with him. Now, on this, when he was basically looking at his track record here, okay, in his pilot testing, there were 54 trades that were taken. 48 of those were winning trades. That's 88.9%. And that gives you a net return of about 79, actually, 0.2%. Typo here. Now, had you put $5,000 into each one of those trades, hypothetical 5,000, you'd be up 102,000 in net profit, and that's not compounding. That's just putting $5,000 into what would have been 54 trades, where 48 were winners and 6 were losers. And as you can see here, the average return 79.2%. The average winning trade is 90.5. So on 48 of the trades, he got a 90.5% return. On the 6 losers, his average loss was a negative 42.2%. So once again, that's where we get our net average return of 79.2%. But it doesn't stop there, okay? That's just the tip of the iceberg, because he's got several other programs that are in the works that he's going to be releasing in the next coming months. Number one, he's going to give you a performance panel. Now, in this all access program, you're going to have access to all of his programs. The question that you might have from time to time is, hey, do I take all of the trades that these programs are issuing? Or during this week, for example, given what's going on in the market, what's the best one I should be looking at? That's the focus of this performance panel, because once again, it's going to basically actively rank all the trading programs so that you can find the best performer in the current market environment. So when I narrow your focus on exactly which program is working best in the current environment, and that's where your focus is going to be. Okay, that's about a $5,000 value there. He's also going to be releasing, and you'll be getting the zero dated option dashboard. It's a dashboard that's the entree to everything that he does. Okay, it's basically going to turn his daily zero dated options level tracking into a full automated trading dashboard. Okay, not only will you get the levels for that day, and he showed you these levels, but you're going to get actionable trades as well on the SPY, the SPX, and more. And once again, the plan on this tool is to offer it for about $10,000. And you're going to also get, the Pinning Alerts Pro. This will be the retail version of his zero dated traded alerts that he'll bring out to the public. Okay. And right now you can access these specific entry alerts anywhere outside of his 5X challenge. So he's already working on this. That's about a $5,000 value. He's also, I think this is great, looking at the Overnighters Club. It's a unique method he's been testing with zero-dated gamma on popular tickers like Apple, Nvidia, and Tesla. Now, right now, you can't trade zero-dated options on those unless you basically are trading them overnight from Thursday to Friday on a weekly option. So if you've got a weekly option that's expiring on a Friday, for all intents and purposes, if you're entering that trade on a Thursday, getting out of Friday, it's the equivalent of a zero-dated option. And his tools will do a really nice job of giving you opportunities to trade individual tickers like these, Apple, Nvidia, and Tesla, as opposed to just indexes. And that's what he currently has in the pipeline. And he's got an additional list of additional tools, scanners, portfolios that he plans to build down the road. And all of that is wrapped into this program. So we established that the list price for all this was going to be $20,000, heavily discounted at $20,000. But what he did this week is he said, look, on this past Saturday and for today and for the, he's basically making 50 spots available. Already 29 spots have been sold, and I know several more have been done during this presentation. So for intents and purposes, we have less than 20 spots that are available. And he knows, once again, that 12,009, that's a chunk of change to lay out there. And so he says, look, I want to split it up into two payments of roughly $64.95. I think it's $64.95 and $64.90. Those are two. So one, what you'll put down is $6,495 when you make your purchase today, and then 30 days from now, your balance will come due on the program. And once again, that's all you need to do to get access to everything in the program, including the 5X challenge. So once again, when you go to Kane's All Access program at tradingpub.com/5X, once again, this is what the landing page looks like, and I've split it into two parts, okay? So once again, we have 21 spots that are remaining. It's actually less. This is a screenshot at this point in time. And if you look here, it's only $12.95 for the first 50. You'll pay $64.95 down today, and the remaining will be billed in 30 days. Now, also, when you're in the program, this is what, when you join, this is a snapshot of what the all access members panel looks like. Okay, so this is where you'll see all the products that are there. You've got Gamma Pocket Payouts, GEX Terminal, and there are 12 of them. So you just kind of scroll across and all 12 programs that are there. The small account challenge information, members only Telegram, everything is right here in your members area. So the other thing that I want to share with you on this, which I think is important because I want to publish this pricing and I want to walk down through it for you in the chat panel, is that there's a way that you can even get a greater discount. As I mentioned, the VIP lifetime price is $12,995. And so when you sign up today, you basically are signing up to make two payments. But if you decide to make both payments today, in other words, pay in full today, Kane is knocking an additional $1,500 off the price. So the total cost to you is $11,295 if you pay for everything up front. And $1,500 is not something to sneeze at if, in fact, this is something that makes sense to you today. And so, yes, once again, all this is available to you. Now, we do have, once again, this is a complete program. And folks, we did giving everybody a 3-day cancellation policy. So if you buy into this program and for whatever you have some remorse about it or whatnot, you've got 3 days to get in touch with us. Okay. Send us an email, call us or whatnot, and say that, yeah, I'm not sure about this. I want my money back. Okay. So at this point in time, I know that we have less than 21 spots left. I'm going to guess that we have somewhere in their neighborhood of 14 or 15, and they're going pretty fast. But that's how this thing was structured and put together. on this. And so let me go to the chat panel and answer some questions that are here. I see that there are several of you that are requesting a replay. I'll be glad to take care of that for you. I see a question here from Top Gun. Can I still get this for $11,295 today? Absolutely. Absolutely. And here's my understanding as to how it works. When you sign up for the program, okay, let me go back here for a minute to the landing page. When you join now, when you sign up here, I think there's another page behind it that says, pay $695 today or pay both and you'll get it for $11,295. Top Gun. If it doesn't say that, and once again, I apologize, I haven't seen it, just call us, at 904-706-3539, and we'll take care of you. But there are spots left as we're talking now. I know that for a fact. And I know that you can get that discounted at $11,295 today, which gives you access to the full program. Let's see if there's any other questions here. Let me see here. Mark says, wow, Kane just alerted all access members with the information at 9:56 a.m. this morning. So critical alert has gone out there. Yeah, so there you have it, folks. Yeah, so people are wondering, they're going like, hey, guys, I don't have $12,000 I can spend at this point in time. Is the 5X challenge available as a standalone program? No, it's not at this time. It's not. What Kane is basically doing is he's just saying, look, for people that have all of my programs at this point in time, I am going to pick and choose on a daily basis what I believe are the best trades to take. Some of those may be day trades, some of them may be swing trades, some of them may be buying calls and buying puts, some of them might be utilizing spreads, or iron condors or whatnot. But he has a number of ways to trade the markets, and he has opened up this account, and he's going to share with you exactly the trades that he's going to take to grow that account by 5 times. That's his commitment. That's his challenge. And he is confident he's going to be able to do that with you. And I like the fact that he's starting out small. Some people have said, like, well, is he going to share position sizing with us? Obviously, he will. But if you're starting with a $5,000 account, in my opinion, and I'll leave it to Kane, I don't think he's going to be risking much more than 5% of his account on initial trade. So you're talking about $250, somewhere along those lines into a trade, maybe max 10%. But risking 10% of your account, I don't think that's what Kane would be doing. Anyway, he's going to share all that with you in a masterclass that he's going to be holding next week before the beginning of the new year. So next week, some point in time, on Tuesday or Wednesday, Monday, Tuesday or Wednesday, he's going to have a master class where he goes over exactly what he's going to be doing in the 5X challenge. And the other thing that I really like about it, like I said, if you join this program and you do nothing more than take the trades that he does in the 5X program, you are going to get double your investment back if he reaches his goals. And we all suspect that he will. So, gang, that basically brings things to a close here. The questions have dried up. I want to thank you all for coming. Kane and Roger and I know how valuable your time is. And we hope that you've gotten good benefit out of this presentation. Look, we also know that you're looking for an edge when you trade the market. And I think what Kane is basically doing in this program and any of his programs, he has like Roger has as well, and the other gurus we have here, they initially created these platforms, these trading techniques, these strategies, these indicators, so that they could gain an edge in their own trading in the market. And once they saw the kind of consistency that got them excited about the program, and once again, folks, these guys they're trading their own money on these programs as well. Then at that point in time, you start to think about bringing this out to the public, because the public, the rest of us as retail traders, could benefit from that. And in this particular program, you're going to have access to all of this. And when you take a look at the 5X trading challenge that he's got, I think that meets the strict criteria of an edge because you've got a very seasoned trader who at one point in time was a vice president of trading at PIMCO and traded hundreds of millions of dollars in bonds on a regular basis. I think it's fair to say that Kane understands how the market works. He's a big believer in gamma exposure, how to trade that information, and it's his guiding principle. And to me, that meets the definition of an edge in the market. Let's see here. So, question here from who's this? Maria? I believe it's Maria. Is there a chance that he offers this program alone, not as part of an elite members pro? You know, I honestly don't know. Uh, and I have to leave that to him. The one thing that I will share with you here, Maria, is that once again, since he is basically going to be leveraging trades that, he's going to be issuing trades that leverages, the best of what his programs have to offer. I don't know if he'll offer it as a standalone, but certainly he does have other standalone courses that can be bought. But for those of you that have any questions about that, and if you would like to address them specifically to Kane, which would be my preference because I just shared with you my opinion. But here in the chat panel, folks, there's Kane's email address. That's a fair question. Ask Kane and he'll respond to you on that. And then there's Kane's Telegram link. That's his public Telegram link. I definitely recommend that if you're not on that, that you join that. But Kane is very transparent. He's patient. He wants to answer your questions. Don't ask him questions about pricing because he doesn't control pricing. Don't say, hey, can I get a better price than that or whatnot? Don't do that. Okay. And what you should do is basically, call our sales department at 904-706-3539. Another good question here from Top Gun. Is there any yearly maintenance cost for lifetime access? No, absolutely not. I'm so glad you asked that question, and I'm so glad to give you that answer. When you join All Access, you will never pay another penny for anything ever. You're getting all of his current programs plus anything that he develops in the future and all upgrades. Okay. And any upgrades or enhancement that he does. That's all included. We don't charge annual software maintenance or upgrade fees whatsoever. So the price that you are paying, once again, either $12.95 over 2 payments or the price of $11,295, that's it. You're all in. No more, and once again, it includes everything that he develops down the road. A question from Next, interesting one. Let me see. Is there any way to pay with crypto? Boy, excuse me, this is Matt. Matt, let me see here. Is there any way to pay in crypto? I don't know the answer to that question. You need to basically call 904-706-3539. Okay. And let's see here. Okay, so there's a comment here. I don't want to misspec here, but Next basically says the fine print says there's a $297 maintenance fee. I'm not aware of that, but I am looking at it right now. Okay, so I am going to copy and paste this so that everybody sees this. Thank you for bringing that to my attention. And I want to apologize to Top Gun for misleading you because I was not aware of this. But here is what is in our service agreement. And I'm going to publish that link as well. And it basically says we'll pay the trading pub an annual non-credible maintenance fee of $297 due on the first anniversary and all subsequent anniversaries on the expected date provided within to keep your Kane All Access member active. So there is a $297 per year maintenance fees that charge. I apologize for misleading you. I was unaware of that. I co-pilot an awful lot of Rogers programs, and in other people's programs, and typically the lifetimes are all in, but not in this particular case. So, all right. Okay, folks. So once again, if you have any additional questions, I'll be glad to answer them. I will go ahead and save the chat now and make sure I send those of you that have asked the question, to get a replay. I'll get that over to our customer care team. And I know that it's 2:39 now, so it's about an hour, a little bit less than an hour and a half left in the trading session. So if you are scheduled to go ahead and are planning to trade this afternoon, just stick to your plan. But I thought it was great what Kane said. Once again, sage advice. He says, look, at this point in time, most retailer traders are out of the market. When it comes to the institution, most of their traders are gone. So who's left are junior associates that aren't basically enabled or granted the permission to trade much or risk much. And then that leaves your trading algorithms, your trading bots, and your market makers. And at this point in time, when you consider what he said about how the bots look to hunt, for long trades that you have in the market, et cetera, like this, you could get chopped to pieces in this market. So just be very, very careful with what you're doing and stick to your plan. And with that, I hope the rest of your day goes great. And I look forward to seeing you at a future event. Bye-bye, folks. And if I don't talk to you any sooner than that, Merry Christmas to all of you. Bye-bye.